right, hello everybody. Welcome back to another episode of the Market Close. I have no idea why you guys are spamming late in the chat when it's literally 3:45. I'm here on time. Again, it's a very toxic relationship. You guys want me to be late so that you can say I'm late because you get dopamine off being able to brag that I'm late and that you're right and I'm wrong. But we're not going to make that happen. We're not going to make that happen. We are not going to let you guys get that dopamine because I'm on time and we got a market to close out. Folks, it is Friday. It has been a very interesting day across the equity markets. We've had a bunch of different things happen. We got some breaking news right as we get into the close. We'll talk about in regards to Tessie. Tessie still holding 315 right here. It did hit 323 at one point today. Palantir, amazing morning. We got $160 on Palantir, and we'll recap why we got that. It was largely in due to a downgrade by an upgrade by Piper Sandler to 170, and that's what seemed to have created the momentum. 2.56% up on the day. Nvidia right here, relatively flat, trying to break 174, kind of stayed at these levels. S&P, new all-time high, 637.4. Looks like we're going to close above 637, and if we do, I mean, we got one more week of July, and if we can carry that out, it's going to be about a 3.5% gain for the month of July, which will be one of the best Julys we've ever seen. Really in the past decade, but also in the past 30 years. So it would be a very, very good month if we can close that at 637, and it's not doing too bad. SoFi right here, 21.25. Google 193. Grab right here, 536. And then Robinhood, also not a bad day, 105. Robinhood got to 106.39. Robinhood right here at 105, up 3%. Rocket Lab as well, 47.66. That one has been flat throughout the day. And then AMD, strong day as well, 2.5%. Hopefully that closes above 166. All right, breaking news on Tesla. What do we have going on? Well, the California Commission on Vehicles, which is one of the California regulators, came out today and said, well, not today, literally 5 minutes ago, Tesla cannot transport the public in an autonomous vehicle. It doesn't matter if it's paid or unpaid, driver or no driver. Tesla can only offer rides to employees, friends, family, and select guests, but only in a non-autonomous car under its CPUC charter permit. Now, this goes directly against what we heard this morning from Business Insider, which was that, hey, Tesla will be unveiling the robotaxi officially in the Bay Area. Looks like that is not the case based on an official statement by the CPUC in California. Now, the stock, you would think, would sell off a bit more on that, and that's not the case. I mean, the stock was really at 317, 314 for the past hour, 314 to 317. That range is at 315 right now. Up 3%. It was at 323, but it didn't fall based on that news from 323 to 315. That was more so just like in general, the market started falling a couple hours ago. So although this news is not the most bullish for the California expansion, eventually I think Tesla will get the regulatory permits they need, but it doesn't look like it's happening this weekend. So whatever rumors in the morning said that robotaxi is coming to the Bay Area, yeah, that's probably not going to be happening. However, I mean, again, this is what we've been talking about on this stock. Like, you would think, all right, that's bad. Tesla back to 300. Nope. Tesla 315. Tesla 315. So not that crazy. And it is up still 3% of the day. SoFi right here, 2130. And then S&P 500, 637. Let's listen to Tom Lee. He was on CNBC just now. And this is his take on the meme stock mania. A lot of people are saying it's 2021. Here's his perspective on why that might not be the case.
Certainly a potential risk. You saw FINRA margin loan balances up almost 20% in the last 2 months. So people are taking on more leverage. This is clearly signs that people want leverage to the upside and they're not necessarily thinking about the downside.
I mean, Tom, American Eagle does a denim campaign with Sydney Sweeney and his stock goes nuts. It's up 19% week to date. Open Door up 8%. Kohl's up 32.5% this week. Krispy Kreme, blast from the past, up 35.6%. Beyond Meat has rallied as well. You see any issue here?
I mean, these are not the stocks that we recommend for our clients. You know, we stick with large cap quality, and our granny shots portfolio is 35 of the best S&P names.
These are like Steph Curry 3-quarter shots.
Yeah, these are not granny shots. You know what? There's $7 trillion of cash on the sidelines, and retail investor sentiment, I think you have to really fracture it. I think the Robinhood community is bullish, but what I'd call the high net worth and the traditional equity investor is still pretty cautious. That's the heart of our universe of clients. So I'd say that speculative activity, it's kind of those are such small examples that I would say it's way too early for me to say they're speculation. Because
Such small examples. I mean, the high beta ETF has been hitting record highs almost every day.
but
I mean, we're not talking about garbage stocks.
But high
either.
beta as an ETF, if you look at that, it usually should lead in a bull market. So it's not unusual, just like momentum MTUM should lead. But the thing to keep in mind is that in 2021, when Goldman cites that data, people were speculative excess in these big Mag 7 and these large cap names. There is hardly any euphoria in those stocks.
What do you think?
I would agree. If you're talking about bubble at this point in time, it's not the S&P 500. Because if you're talking about bubble and saying S&P 500, you've never seen the late 90s. It's just not a fair comparison. The other thing is, what I hear bubble from a lot of people, it's people that miss the market and they're trying to overcompensate. The valuations for a lot of these big cap stocks, not even close to where they were in the 90s.
And he's 1000% correct when we think about Google, right? So I think Tom Lee's perspective right there makes a lot of sense. Basically, the argument is, hey, there is a little bit of a meme stock mania going on in the Open Doors and Krispy Kremes of the world, but that is not in the Googles of the world that can barely get some love after putting up the numbers that they put up. Steve put out a new article about Google. I'll link it right here in the chat. He'll be on the show probably in about 25 minutes, and so we'll get his take. But he cannot believe what the heck is going on with Google and why it's being treated in this way. But that's not bubblish. You know, Google 300, maybe that's a little bubblish, even though you can make it definitely make a case for Google at 300. But Google's nowhere near that. It's barely at 200, right? Or barely above that sort of 215, 220 level where people think is the fair market value. So it's consistent with the argument we've been making over the past couple of days, which is, hey, if Open Door, Krispy Kreme, and Kohl's want to run, let them run. The Robinhood chief brokerage officer, Steve Quirk, was on CNBC this morning and said, look, our customers aren't even trading that many of those stocks. It's minute in comparison to the volumes on the NVIDIAs and Teslas of the world. And so as a result, hopefully that is not something that could actually take down the market. Because if it did, get to that point, then I think we would see a lot more euphoria in the actual quality names that matter. So that's what we got on some of these meme stocks. A lot of you guys in the chat are saying that Tesla had their first FSD ride in the UK. I actually did not see that headline. So if that is true, which I believe that is the case, then that is very cool. We're going to see more FSD expanding across the entire world when it comes to the UK. Oh, yeah, there you go. Yeah, Tesla, they actually showed off a video showing off FSD in the UK. They just posted that just now. Or they posted this actually a couple hours ago. Very cool. All right, so FSD in the UK, it is happening, and it likely will be expanding across the entire world as well. Okay, Trump just said something. Let me pull this up right here. Trump just said the UK trade deal is concluded. We'll see if we can make a deal with the EU on Sunday. Okay, not bad. Let me see if that's a post or if that's with reporters. That's with reporters. Okay, cool. So that's with reporters. He just said a UK deal is confirmed. Speaking about the UK with FSD now in the UK, and EU deal. He said he'll be meeting with the EU on Sunday. We'll be meeting with the EU on Sunday. I mean, the EU has been hinting over the past couple of days that they're getting ready to make a deal as well. They've been threatening different types of tariffs, which is just obviously a negotiating tactic from both sides. So will be nice to see if we can make that actually happen. Here was another piece of news this morning. We got 5 minutes until the market closes. Got a bunch of different headlines. This one I thought was pretty interesting. You can now use Venmo and PayPal in the United States of America to send a gift in the form of money to the U.S. government to help pay down the $36.7 trillion of national debt that we have. This is a new product that PayPal rolled out today. PayPal owns Venmo, so you can pay through PayPal or Venmo. And this is the type of innovation that we've been missing from PayPal for a long time. And if you would like to send more of your hard-earned money to the United States government so that they can help pay off our debt, you can do that now if you would like to do that. So you would think this is what like taxes should be for, but no, if you're feeling very altruistic and generous, you can give more of your money to politicians to see if they can pay it off. So yeah, that was a rather interesting headline that we had this morning. Meta, we do have a headline right here on Meta as well. Looks like they are hiring more and more people. Yes, that is correct. Wow, chief scientist. Shout out to Evan. He just posted this right here. I'm not even going to try to say his name, guys. That guy. I'm not going to do it. I'm sorry. That guy will be chief scientist of Meta Superintelligence Lab. So he's going to be under Alexander Wang, who's the chief AI scientist. And this guy, who is this guy? Let's Google him real quick. Who is this guy? This guy he's from OpenAI. Dude, they just get everyone from OpenAI. There you go. So this dude right here, this is LinkedIn. He was a PhD candidate at Stanford for 6 years, went to OpenAI in 2022, and Zuck's poached him. How much do you want to bet, bro? It's gotta be what, 300 million, 400 million, maybe 500, maybe $1 billion. Let's give him $1 billion. You know, why not? I mean, he's not just another researcher. He is now a chief scientist of AI at Meta Superintelligence Labs. There you go. There you go. So Zucks continues to be on his escapade of making sure he can get as much money as possible, or get as many researchers as possible by using as much money as possible to continue building out superintelligence. Google right here, 193, Robinhood 104.61. We're probably not going to get that 105 close. We were at 106 at one point. I think Robinhood's capitulating really well. We'll talk about some of their metrics going into earnings next week as well, but that one's holding up. Palantir, it would be very nice to get a 159 close, but looks like we're going to get 158.50. Grab right here, 535. GitLab, 47.86. Broadcom, 289. TSM, 245. Open Door was up 5% of the day. AMD, 166. Shopify, 124. And then you got Tessie making a little bit of a push at the end of the day, 316. S&P, I don't know if we're going to get 537 or 637. We're at 637.03. 3 minutes to see if we can get above that. And that would be all-time highs. That would be all-time highs. The company environment must be bad at OpenAI. It's either that, or it's like these researchers really don't think GPT is going to be the key to AI, right? GPT-5 is coming out. Verge reported in August, and maybe a lot of those researchers just feel GPT-5 is not that good and that they'd rather work on something new with Meta. Maybe they feel the culture at the company is bad. Maybe they feel the compensation's not enough, which is kind of wild because you would imagine they're all getting stock, and OpenAI is only worth $300 billion. Only, quote unquote. I mean, if OpenAI gets to even $1 trillion, that's a 3x on their equity. Like, that's a 3x on their equity. Like, that in and of itself should be exciting. And the way AI valuations are moving, that could happen relatively quick in the next couple of years. But Meta giving up all that cash in the front, right? Saying, hey, you could make $300 million on your equity, but we'll just give you $400 million right now. I mean, that is pretty enticing. By the way, speaking of these AI companies, Anthropic, we talked on Monday. The headline was that they're going to be raising at a $100 billion valuation. Well, that number is now reportedly $150 billion as per the Financial Times. And the reason it went to $150 billion is because I shared that quote a couple of days ago of the CEO saying, hey, I know we said we wouldn't take Middle Eastern money, but the race for AI is too important and we're going to need Middle Eastern money. He got mad at Trump for taking money from Qatar and then ended up saying a couple of days ago, it looks like we're going to need some Middle Eastern money. Financial Times is reporting these Middle Eastern funds are ready to invest at $150 billion on Anthropic. Anthropic is the parent company of the model that is called Claude, which is one of the best coding models that is out there. I mean, it gives a little bit of context for why Palantir is getting its valuation as well. If these AI companies in the private realm are going to be getting multi-$100 billion valuations and they're not profitable, but they're growing like crazy off the expectation in the future that they will be very profitable and will be cash cows, you know, Palantir is getting some of that in the public markets as well. Tesla right here at 315, Google 193, Robinhood 104.77, Palantir 158.82. We got 30 seconds. 30 seconds until this market closes. Yeah, Anthropic was $10 billion 2 years ago. Dude, imagine being early employee at Anthropic, OpenAI. I mean, like, these companies have absolutely just exploded, and it's incredible to witness. So we'll have Steve on in about 20 minutes. We have a bunch of other headlines to go through. We'll listen to a little bit more of what Tom Lee had to say, and then we'll be closing out another Friday. I still feel time is moving way too quick. I don't understand how we're at the end of July already, basically. But I guess it moves faster as you grow older. And this will officially conclude the third week of Q3. We'll be starting the fourth week next Monday as we get into it. All right, folks, Friday, July 24th or July 25th, 4 p.m., the stock market is now closed. All right, that is it. We are done for the week. 158.80 on Palantir, up 2.54%. While I'm reading out some of these ending tickers, put your year-to-date in the chat. We pretty much do a year to date every Friday, so you can go ahead and put it in the chat, and then we'll take a look at how everyone's doing. Tesla right here, 316. That's up 3.5%. Google, 193.18. S&P, 637. All-time high on the close of the S&P. Dude, it's $3 away from 640. I mean, 64 hundo. We were at 48 hundo 3 months ago. Absolutely incredible. Robinhood right here, 104.85. That's up 2.8%. Again, Palantir, 158.80. All-time highs. Grab, 536. Uber, 91.34. Broadcom, 290. Basically all-time highs. ASML, 711. That recovered a little bit today. Navitas, that was down 2%. TSM up 1.65. Intel was down 9%. Not the best day for Intel. Chipotle was down 14% yesterday. Chipotle today up a little bit. So a bit of a recovery on Chipotle. It was the worst day Chipotle had in 7 years yesterday. So that one wasn't the best. A little recovery here. AMD, 166.47. Not a bad close. Oklo as well, up about 1%. Shopify, 1.93. Big Bear AI. That one was down 5% on the day. CoreWeave was down about 3%. UNH, relatively flat, up a little bit on the day. D-Wave was down about 4.5. SoundHound was down about 2%. Deckers, nice day, up 11%. Oscar was up 1.73%. And then Tessie right here, 316. S&P 637. And then Google, 193.18. That's what we got to end out this Friday. My year to date is 94.18%. 94.18% on my year to date. Nathan has 93. D1 is 35%. Logan is 51. Arlie, 206. I'm Beneficial, 148. KM, 50. Kashab, 38. 408. Thomas, 38. Darth, 49. Carlos, 18.5. Butters, 102. SV, 63. I mean, again, a lot of these are well above 20 to 30%. Quarantine Quartet, 75. MB, 42. Brandon, 88. Another Brandon, 137. Kalen, 103. Jake, 133. Sean, 103. Charlie, 108. Investor Wayne says 13%. Tesla's really holding me back. If you are heavily leveraged or exposed to Tesla, definitely is hurting a little bit of the portfolio, but it could be worse, right? Tesla could still be stuck at that 220 range that it was in March. And so at least it's not there. Also, you can't deny the earnings kind of suck. So you can't really expect the market to take it 400, but over the long term, that's why I bought into Tesla. I do think it will pay dividends going into the next decade. Rocco Clock, 132. Alfredo, 138%. Raul, 25%. Also heavy on Tesla. Still even being positive for the year and being heavy on Tesla. Not the worst thing in the world. Nathan right here, 108. Brad, 70, or Brad, 57. Martin, 70. Ryan, 25. Anon, 44%. Google's lagging. Gene, 25%. 65. Ethan, 26. I mean, it's just incredible. It is absolutely freaking incredible. Retail is crushing it. Retail is crushing it. I mean, look, it's one of those things too where the reason I think it's also believable for a lot of you guys is because everyone bought the dip. I mean, like a decent number of people bought the dip in April, May. If you got Robinhood at 29, it's up 300% in 3 months, and your year to date is like 87%. It's like, I can understand that. Like, I get it. If you bought the dip in April and May, I mean, you've just been heavily rewarded, which is what we're seeing right here. Grab 537 after hours. Nvidia 173. Not to mention Nvidia. Remember, Nvidia, Palantir, and what's the other name? Nvidia, Palantir. Let me pull up the exact chart. But Nvidia and Palantir are up there. What's the third one? Just to make sure I get it correct. All right, so the top 5 are Nvidia, Palantir, Amazon, Meta, and Google. These are the top 5 retail-owned stocks on Robinhood. There's a couple other metrics like Vanguard that I look at to show the buys and sells every day, but these are some of the top 5 that show up every day. Obviously, sometimes you get Open Door in there, you get CoreWeave in there when those are having their run, but those are some of the top 5. Nvidia and Palantir alone from March to now have done exceptional, right? So for the majority of retail that loaded up on those names, you could understand why the year-to-dates are so strong as they're getting momentum. S&P 500 right here, 636.81 after hours as we get into this market close. Rocket Lab as well, massive day. I mean, it's down 1.4%, but massive week or massive 2 weeks as it's up about 40%. And that is another heavy retail name. I mean, you just have a lot of good companies that had heavy months since April. And, that's led to a lot of momentum. That's led to a lot of momentum. Google right here, after hours, 193. Google right here, 193. All right, let's finish up with Tom Lee and get some of his thoughts. What else is going on in the broader markets? Again, we saw that he said, hey, speculation is not that big of a deal because we think it's not existing in the bigger names. Here's some of his other thoughts on the macro, and then we'll keep going from there.
there's a speculative bubble that inflation is coming back, and there's a speculative bubble that we are on the precipice of a recession, because that is probably the most common conversation I have with clients. And every Zoom I've done with an institutional account, always 5 minutes in, someone's like, Tom, how come you're ignoring all the risks out there? Don't you realize we could already be in a recession? So I think there is speculative excess in the fact that we're in a recession.
And negativity.
Yes, just like there was a bubble of pessimism after GFC. Remember, from 2009 all the way through 2019, it was a bubble that another financial crisis was coming. It was
Well,
a
we had
bubble of pessimism.
PTSD, Tom. I mean, that was just not a regular occurrence.
That's right. And the market today has PTSD of trade and the Fed.
All right. Well, we are on trade watch.
It's a very interesting point. And the point that he's trying to make right here is that as he's had discussions with more and more of his clients, this is the same thing he said back in 2023, those clients are still institutionally bearish and they don't understand what's going on. And you kind of need that wall of worry. And if that wall of worry continues to exist and exists at the levels at which Tom Lee is saying it does exist, you don't have extreme euphoria. Also, again, Google at 193 is not extreme euphoria. Nvidia at 173, one could argue is cheap and fairly valued. Meta at 714, one could say is cheap, even if the upside is not as aggressive as it was when it was back at 500. I will give you Tesla and Apple in the Max 7 are up there, but those are also unique situations. Tesla with massive potential and Apple, it's Apple, right? There's always going to be passive inflows. Outside of that, Max 7 is not cheap. By the way, I think Microsoft hit all-time highs today. If I'm not wrong, did we close at 517? Microsoft closed at 513. It did hit 518 today. Microsoft is only $200 billion away from becoming the second $4 trillion company. So again, that level of speculation doesn't seem to be as aggressive as people are thinking, at least in the most important names in the market.
Now we're looking for clues whether AI is paying off in terms of applications and real world benefits. Those benefits are accelerating. So to me, we're still in the stage where it's a virtuous cycle where we're seeing better discovery, better use of AI, better training, which is justifying the capital spending. So the market should reward these companies. So I think we're still in the earliest stages of this AI sort of cycle, and therefore the best companies should be leading.
Chris, you agree? You sound a little more skeptical of that group from here forward,
right?
At least in the near term, than Tom.
Skeptical is not the right. I think it's still a great secular story.
Cautious,
right? We're not, but what we're doing is we're looking 3, 6, 12 months down the road, and we're saying, okay, how does it not work? And the way it doesn't work is that the economy is better than expected, that the Fed is cutting rates, that the deficit's not as bad as feared, and suddenly this is a really hospitable environment for cyclicals, for the contrarian trade, for small caps, and we can see a short-term rotation. Do we like it as a secular trade longer term? Absolutely. Have we been behind this trade for a while, since April, or well, actually longer than that, but really got aggressive in April? Yes. Do we think maybe it pauses, it consolidates? Perhaps, right? And now we're just thinking, okay, how are we wrong? What do we have to look out for? And what we have to look out for is the good. But as far as a secular trade, it's still a great secular
only
trade.
because the good leads to a rotation.
A rotation.
Some money coming out. So I'll get to that.
And that rotation also, as much as it wouldn't be the best for some of the tech stocks that are getting all the money, it would be rather healthy for the broader market. These were the top 20 names that were traded today in the derivatives market, aka options, but I say derivatives because it makes me sound more intellectual, like a quant. Tesla, 4.9 million contracts. Nvidia, 2.7. Palantir, 1.1. Palantir, top 3 in the options market. AMD, 1.1. Intel, 1.1. So AMD, Palantir, Nvidia, Tesla are in the top 5 names. Then you have Apple, Opendoor, Google, MicroStrategy, iBit, Robinhood, Amazon, Meta, Marathon, Google, SMCI, Microsoft, CoreWeave, Coinbase, and HIMS. HIMS, we had some news for today as well. We'll talk about HIMS. It had a bit of like a 7% decline, and then it kind of recovered. So we'll get into that in a second. But these are the largest names that were traded in the options market. So what happened on HIMS today? Let me pull this up. There was a press release. Lawmakers press FDA to target compounded fake weight loss drugs. Dozens of lawmakers are urging U.S. health regulators to crack down on the market for knockoff weight loss drugs. The lawmakers asked the U.S. Food and Drug Administration to stop the counterfeit and copycat versions of GLP-1 drugs. The lawmakers expressed concern that illegal counterfeit medications pose an increased risk to patient safety and requested an update by July 30th, which is next week. I don't really know exactly how that hurts HIMS. Because if I'm not wrong, Hims is not a fake. They're not selling fake weight loss drugs. They're selling compounded weight loss drugs. Now, if you assume compounded drugs for weight loss, like AKA their Ozempic copycat is fake, then yeah, I guess that definitely does affect Hims. But that word fake is rather interesting. Hims right here ended up green on the day. It was at almost, it got to 59.94. Then news came out and it fell back to like 55, recovered to 57.64. Don't know if it's going to be that big of a deal. But sounds like big pharma lobbying to hurt smaller companies. It is peculiar that press release came out when it was 6 cents away from hitting 60. It's a bit weird. But yeah, nonetheless, that came out. Are you still holding Hims? Yes, I have not sold my Hims. Average is 55.85, 700 shares. I am just breathing above water now as the stock has rallied, but I haven't touched it. It's just stuck at those 700 shares. Steve is coming, but he just texted me and he said 4:45. So this is what Steve does. He's probably in a meeting with some lawyers. So he'll be here in probably about 30 minutes. Compounded isn't fake, but still targeted. Yes, that is also fair. So that was the news on Hims, but I don't think the market cared that much. I mean, it dropped it for a second and then he kind of just rebounded and we kept going forward from there. Robinhood right here, 105.09 after hours. Bitmine didn't really do much today, down about 4%. SBET, the co-founder, or sorry, the co-head of BlackRock's digital asset strategy left the company today, BlackRock, to join SBET. SBET right here down about 5.7% of the day. So, I mean, that's pretty damn bullish that the guy left BlackRock, which is, you know, a very, very reputable company, to go join an Ethereum treasury. But he did, probably because he's super bullish on Ethereum. And that is likely why he left. Steve is playing Pokemon. Yeah, maybe he's lying to me. Maybe he's just playing Pokemon. Camp, thank you for the 50 super chat. How long can Palantir sustain its revenue growth acceleration? What's the realistic year-over-year ceiling? 40, 45%, 50%? How will a slowdown impact the stock? You know, Palantir is priced for more than perfection at this point. It is a $374 billion market cap. Steve did call me during the day, and his reaction to Palantir hitting 160 was quite entertaining. So we'll see what he says today when he gets on. But look, the thing about the revenue growth and the ceiling, quote unquote, for the revenue growth is none of us know, right? None of they have not really put up massive quarters of revenue growth yet. They went from 13% 2 years ago to the recent quarters where 27%, 31%, and then 36%, and then 39%. The question is, can we actually get to 40%? Which I think we'll get to next quarter. But then after that, can we get to 50, 60, 70? But can we really get, again, this is a company that only has 769 customers. Can we actually get it to the point where it's putting up 80, 90, 100% growth in those NVIDIA types of numbers? I don't know. And as a result, I don't know what to make sense of the valuation if we don't know what the revenue growth looks like. I do know the TAM feels infinite, not literally infinite, but you get my point, right? The TAM is in the trillions of dollars. And if that's the case, then I think there should be some momentum. But ultimately, August 4th, we're going to know. We're going to know, and we're going to have to see what these earnings look like. Amit, what price target to the positive would make you cash out of your Palantir position? Like, it can't get any better than this? Dude, see, it's a funny question because, like, let's say Palantir goes to 500 tomorrow. I think everyone would be like, okay, like, this is like, what's happening? But is there that big of a difference between 500 and 160? And obviously, yes, there's a massive difference. But the point is, like, just metaphorically, no one, I don't care who you are, no one thought it would be worth $370 billion on $3 billion of revenue. No one. Not in my wildest dreams did I think that would happen. And I think that would be irresponsible for me to say that would happen. And I'd rather be wrong than irresponsible in claiming that. So I don't know what that price looks like. I do know that the covered call premiums are juicy. And I do know that if you are still super far out of the money, you can make a killing on some of these premiums. And this is a company that, again, less than 800 customers, I don't think they've hit their inflection point. And when they do, I think things can get really fun. I mean, the fact that Piper Sandler came out today and said, we know it's expensive, but we still think that you should buy the stock on any pullback because it's a one-of-a-kind company. It's just, again, what more can you say? And it's not just Piper Sandler, UBS, Bank of America. I mean, all these guys. Now, Bank of America has been covering it for a while, but Piper Sandler's like, hey, we've been looking at it for 5 years. We said nothing. But now, no doubt, Palantir carries a rich valuation premium and remains a high-risk investment, but it also has a one-of-a-kind growth and margin model that, if proven durable, could grow into a $24 billion run rate business by calendar year 2032, which is only about 7 years away. And as a result, they have their $170 price target. It's pretty incredible. Piper Sandler's a little late to the party, but the fact that they're initiating coverage just shows how they can't ignore this name. And on top of that, it's very similar to me with Tesla. Like when I was talking to Steve on the phone today about Tesla, I was telling him, dude, I just disagree with you and Chris saying that Tesla has to go to 200. I'm like, I really think you guys are wrong. Just like you guys think Palantir has to go back to 50. It's like, you're wrong. It doesn't have to do that. It really doesn't. It can be expensive for a very long time because people believe in it and they're putting up the growth. Now, Tesla's not putting up the growth, but Tesla has a whole different type of cult following. It's much more well-known than Palantir. Palantir's actually putting up the growth. And if they can keep putting up the growth and inflecting, I would not be surprised if it comes back down to like 120, 130. I would also not be surprised if it goes higher because the growth is ultimately what determines everything for this name. So that's what we got right here on Palantir at 158. Yes, I still have my Misty 500 shares, just holding strong on that and collecting a dividend. Yeah, I mean, this is a great point. Quantum stocks are staying high and they don't really have super, super big revenue or EPS estimates, right? Like they're not really putting up tons of earnings, but people believe in them. And you can't deny that if people believe in them, then there probably is some level of a moat to companies that people do believe in and that can put up results. Let's get a little bit of an update right here on Trump and some of these trade deals, and then we'll keep going from there.
Friday. The latest news buoying markets today is that the EU and the US could be getting closer to striking a deal. President Trump and European Commission President Ursula von der Leyen are set to meet in Scotland on Sunday. Now, von der Leyen announced that meeting on social media earlier today, saying it came about after a good phone call with the president. She said they'll be discussing how to keep transatlantic trade relations strong. And then there's China. We know that the Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and USTR Jamieson Greer are all headed to Stockholm this weekend to meet with a Chinese delegation for their third round of in-person talks starting early next week. And administration officials have said these talks could be broader than previous rounds, so it's not just chips for rare earths anymore. They've said topics including China's purchases of Russian and Iranian oil, its overall manufacturing capacity, and potentially the ownership of TikTok could all be on the table next week. And Scott, I just say the White House has spoken very highly of China in recent weeks, really sort of trying to set the stage for those talks to go well next week. And remember, China has a deadline of August 12th to make progress before their tariffs are set to ratchet back up. So a few extra days on that end. Scott.
So it's not August 1st like the other countries, but August 12th. I think Trump is going to get it done, dude. I think we're going to get this done with the EU by this weekend or very close to next week. And I think we will get the August 1st one done or August 12th one done with China as well. And if we can, bullish, like we get the EU and China legitimized. We got the UK done. We got Indonesia done. It looks like we got Japan done. South Korea, Bessent said, should be up next. India media has reported that towards the middle of August, they are getting ready to announce that one. I mean, we get a string of trade deals. Look, here's the thing. We got a week left until August. Let me do this poll right here. I did this poll yesterday, but let's take a poll again. Are we expecting an August 5% drawdown as consistent with the past couple years? Are we expecting it? That's the question. And if we're not, because we have so much good news in August to keep it going, this will be one of the greatest bull markets in the history of the stock market if we can avoid the August slowdown. By the way, take a look at this chart from Goldman Sachs. Call options in the derivatives market now make up nearly 70% of total call volumes. This is the highest since, you guessed it, 2021. So, yeah, people are bullish. People are freaking bullish. And again, my take on this always comes back down to if we were to get a dip, forget even 5%, 1%, 2%, 3%, 4%, before we get to that 5%, quote unquote, pullback at 10% is more of a correction. I think you have so many fund managers that have not deployed and that will just be waiting for a 3% dip on the S&P, which would cause probably a 10% or at least an 8% dip on individual stocks because they just don't know if they're going to be lucky enough to get 6,000 on the S&P again, or 5,800 on the S&P again, especially if next week, which is the heaviest week for Mag 7 earnings and overall S&P 500 earnings, crushes. This week was a light week on earnings. Obviously, we had Tesla and Google, and those were big, but next week's the big week. If those companies crush heading into August, you get a little bit of a pullback. I think you buy. I think you buy that dip and you don't get greedy and wait for like 57, 5,800 on the S&P. CNBC is talking about Palantir. All right, let's pull them up. Let's see what they're saying. 58% of you are still expecting the dip. 58% of you are still expecting the dip. All right, let's see. Oh, they're doing a whole segment on Palantir, huh? They're doing a whole little segment on Palantir today. Let's see what suit they got on. I don't know who this guy is. I've never seen him before. Let's see what they have to say about Palantir today.
Moving this much over this period of time, what gives you the confidence that it can grow into this valuation a la NVIDIA?
Yeah, I mean, I think what we've learned, let's say over the last couple months that we've been doing more due diligence on the company is this is more than a meme.
This is the Piper Sandler guy. This is the Piper Sandler guy that just initiated today at 170.
This is a real business. When you go to a SAP Sapphire event, see meetings around SAP and Databricks and the role that Palantir has there, and standing room only sessions. When you go to Databricks AI Summit, you see standing room only sessions of large enterprises. That's not even their main market, right? Their target market is government. And so a lot of our due diligence and bullishness is really looking at a longer term picture. How big can this company be? What's the art of the possible? And if you think of the art of the possible here, $2 trillion TAMs that they're going after, government, there's a massive secular shift from big machines, proprietary software, to small machines, drones, AI. We are in the early innings. We have this $2 billion government business.
Okay.
We think they could 5x to 10 billion on the enterprise side. That's $1 billion business. We think that could 5x as well. So very early days.
What are the signals
what we're
then?
underwriting is a longer term opportunity.
What are the signals then in product and strategy within Palantir that they are both consolidating the lead that they've got thus far in this enterprise AI lane where they are, and expanding? Does it have to do with developer tools? Does it have to do with platforms, unique environments that they're going to build? That's part of the enterprise software playbook, but I don't know if they're going to follow that traditional playbook.
There's nothing traditional about this business model, management team, or approach. So unconventional is the right label here. And I think 5 years ago, when we looked at this business, we put it in that data tooling kind of space. As we've done a lot more due diligence, talked to customers, talked to partners, those former competitors are now partners. Both on the defense side, where they compete against prime contractors, they're now partnering with the primes.
Lockheed Martin, Booz Allen Hamilton, Raytheon, Anduril. I mean, he's right about that. Accenture, they're all becoming partners at this point versus competitors. Databricks, that's a big one. People thought Databricks was some massive company that's growing faster than Palantir. Now they're partnering. It seems like they have to work with Palantir, and that is only adding to its moat.
With data companies like Databricks, they're not partnering with Databricks, right? So I do feel like the signals are competitors turning into partners, number one. Number two, if you look at just web traffic trends, if you look at like the acceleration you're seeing in web traffic trends going to the website here, the pace is very similar to Palantir, as you're seeing the web traffic trends at ChatGPT, the web traffic trends you're seeing at Anthropic. And so it looks like those signals there are matching up with what we think will be an AI secular winner, along with some of those others.
We were just showing on the screen the government revenue growth, and Palantir does have a great exposure to government revenue because it's won a lot of that business. But aside from that, from a strategic point of view, what's the biggest risk to Palantir, either a technology-based competitor or a shift in trend that would potentially upend your move here?
Listen, government's a little harder. I'm not a government specialist, right? So that's a little bit of a black box for me, but you can see the awards stacking up that gives us confidence that business can get a lot larger. You have this secular shift from big machines to small machines and AI software. On the enterprise side, what could go wrong? What's driving that business? 30 years, we've seen the pendulum swing away from custom software towards prepackaged SaaS. what needs to happen is you need to see a shift away from prepackaged software to custom. And if that happens, I think that's what's fueling the growth for Palantir. If that pendulum doesn't swing back to custom builds, where a city builds their own custom app on top of Palantir, where a Wendy's builds their own custom app on top of Palantir, if they go back to just buying prepackaged software, that growth profile will be wrong. That's where the risk lies. So that's the secular trend you're betting on here with this one, is more enterprises with their own proprietary data, with this ontology logic layer delivered through Palantir. They can build their own custom apps. That's
Well, I love how clearly you articulated that risk. You're watching your blind spots. Brent Braceland from Piper Sandler. Thank you on Palantir.
Retail understood that Palantir was not a meme at $7. Wall Street is now telling their clients, the clients that have very, very big pockets, that Palantir is not a meme at $150. And retail gets to sit back and let Wall Street catch up to this story. I mean, this is just incredible. I don't know if I don't know if any of us are ever going to see a story like this ever again. I'm not just talking about the stock. I'm obviously the stock is incredible and what it's been able to do and what it can do in the future, but rather the story of being so damn early to a thesis and just sitting back, being patient, seeing all the evidence happen in front of you, and then having Wall Street capitulate. I mean, there's a couple of bears on Wall Street. Louis De Palma still probably bearish. Rishi's still stuck with his $40 target. At least he upgraded that from $11 a couple months ago. But the majority of the street has kind of realized this is happening. This is happening. And it's incredible, dude. It is so freaking incredible. Is it possible that Palantir can get to 80% revenue growth? Is it technically possible? Yes. Because again, they have 800 customers. They have not really begun scaling, in my opinion. So I think anything is possible. It's just going to be hard, right? It's going to take amazing execution, and they've already been executing at a very high level. They've got to just continue to do that for the long term. And I think they probably have to hire a lot more people. You know, if you want to grow revenues at 80%, at some point, you're probably going to need to hire even more people. I know they have these AI FDEs coming out, which should make their people more efficient in and of themselves. And maybe that can help them get there. But I think it's going to take a lot to eventually get to that 50, 60, 70% growth. But the idea that it's possible to me is like very real, because they only have 800 customers, less than 800 customers. And so everyone in the world that's in the enterprise space, every government organization on the planet could use Palantir. It's just up to Palantir to execute to be able to grow the company to that point. Just like every single adult in America could have a Robinhood brokerage account, but it's up to Robinhood to be able to convince every adult in America to get a Robinhood broker, right? So it's really up to the company, but their TAM, their opportunity is gigantic. And given Palantir is a SaaS business with very non-cyclical revenues that are reoccurring, it just gives you a better shot at seeing the growth story. It's really amazing. August 4th, Monday, August 4th will be the earnings after the bell. I'll be here live, likely with Arnie, Amir, Matt, and hopefully some other people can join us. And we will once again be ready to see Palantir earnings. Again, the story of this is also pretty incredible, because for those that told their friends and family to buy, you know, they've just got to be looking at you on days like this and being like, dude, thank you. Thanks, bro. Like, thanks for letting me know. I mean, they probably know nothing about Palantir, but just taking the risk and opportunity on it. And again, the reason I think Palantir deserves to be able to get this type of extreme multiple outside of just the qualitative elements to its growth is because, again, I think this is how businesses should operate. I think businesses should give as much value as possible, and eventually that value will be disproportionately rewarded to you. You don't get that by being arrogant. You don't get that by being cocky. You get that by actually providing value to the marketplace. I mean, I saw this guy on Twitter today who runs a Patreon, and he posted a couple of his stock picks that were green today, and he posted a screenshot of them, and the caption was, "Never doubt me." And it's just the most cringe. It's just like, dude, no. Everyone should be skeptical of everyone. I would never say never doubt me. Like, you should doubt me. If like my thesis on Grab or Palantir or Robinhood, like, you should have doubt on that. It should never be coming from a point of such arrogance and ego to say, I'm the stock picking guru of the world. You should never doubt me. What type of nonsense is that, right? That is not the right way, A, to build a community, in my opinion, but B, to actually build a business. And with Palantir, Alex Karp quite literally said, you should negotiate with us by telling us that you want more value before you're willing to pay us. And we will give you months or years of the product for free in order for you to see the value for you to then pay us. That is how you build a company. That is how you build a business. That is how you build a relationship with a client. Not by saying, never doubt me, I'm always going to be right. That's a snake oil salesman. And Karp has been correct, accurately correct over the past 10 years in saying, and past 5 years publicly in saying that all these software companies are quite frankly full of shit, because that's how they have monetized their business. And that has not led to actual transformational software for these clients. Palantir just did it differently. Palantir just did it differently. And that's the way to do it. That is the way to do it. Yeah, imagine when they start charging for real. Imagine when they start charging for real. I'm not going on a rant. I'm not going on a rant or anything. I just, dude, we really need an intro for the rant. You know how CNBC has the breaking news thing? I'm going to download that and like edit it. And instead of it saying breaking news, it's going to say rant. And I'm going to save that. And when it's time to go on a rant, we're going to do that. But I just saw that tweet today and I'm like, this is some guy who has some Patreon and he's telling his audience to never doubt me. And I'm like, it's just cringe, bro. It's just cringe. You should always have someone doubting you. And if you should be very skeptical of someone who said me, because there's a level of narcissism and ego there that is just not the right way to build an audience or to offer a product to the marketplace. Here is that update on Anthropic and that $150 billion valuation. And then we'll keep going from there.
News on this very issue of AI and big company investments. Anthropic is in the news now. Mackenzie Sigalos has that for us. What do we learn here?
Hey, Scott. So we've got the FT reporting that Anthropic is aiming to more than double its valuation to over $150 billion. Now, the AI startup, seen as a top rival to OpenAI, is reportedly in talks with investors in the Middle East, including Abu Dhabi's MGX fund, about a funding round that could raise up to $5 billion. Now, Anthropic, which is backed by Amazon and Google, has been reluctant to accept money from Gulf sovereign wealth funds in the past. But in a recent staff memo, CEO Dario Amodei warned that doing so might enrich dictators, but also acknowledged the challenge of sticking to that principle while scaling a business. Now, that report also points to Anthropic's annual recurring revenue quadrupling to more than $4 billion this year, driven largely by enterprise customers. We have reached out to Anthropic for comment, but haven't heard back yet.
If Anthropic's going to go to 150 billion, you're going to have companies in the public marketplace that are executing and profitable, like a Palantir, get some valuation as well. Now, Anthropic is really growing. Like, we can't deny Anthropic's growth is amazing, but I think that's why some of these other AI companies are getting a bid. Shout out to Iliano and Arnie. Iliano went to Italy over the weekend and is having a nice little steak dinner with our friend Arnaldo. I just want to ask you guys a question, okay? Do you guys think that's edible? I just want to know. Like, for all my medium rare fans in the chat. And by the way, I've opened up to being a little bit more optimistic towards medium rare. I had a medium rare steak, I think like 3 weeks ago. It wasn't the worst thing in the world. But like, come on, bro. Like, first of all, that's a thick steak, bro. That's a very thick steak. But second of all, not even just a little bit less pink. Is that crazy that I'm saying maybe a little bit less pink on that? Or am I just like, do I not get medium rare? That's all I want to know. That's rare, right? Yeah, that's rare. That thing is alive. Like, come on, bro. Like, come on. But the Europeans, correct me if I'm wrong, you guys are known to eat more rare meat, right? Like, I think that's like a thing in Europe. You're known to eat more rare meat. Based on like some like Instagram reels I've seen in Europe with like steak, it's much more rare than the United States. It's much more common to eat that type of rare steak. But yeah, okay. So some of you guys agree with me. Like, that's a little pink, bro. That's not. I don't even know if that's medium rare. Okay, some of you guys are saying yes. Some of you guys are saying no. Yeah. Maybe Gordon Ramsay would say it's effing raw. I've seen Gordon Ramsay make a steak though, and he's eaten a steak before live, and I felt that was also not like necessarily medium rare. Felt like it was more rare. But there's this other type of steak called blue. Have you guys heard of that? Like, that's when it's like really rare. And yeah, this thing, bro, this thing people think is edible for some reason. I don't know about that, bro. I don't know about that. Blue is a little That's a little too aggressive. That's a little. Blue is good. Okay, I guess some of you eat it. Yes, in France, if steak is well done, they say you are eating a shoe sole. Maybe it was France. I was watching this. It was either a TikTok or an Instagram reel where someone was talking about like Europeans and how they eat steak. Probably doesn't mean for every European, but they were saying Europeans tend to like it more on the rare side. Microsoft right here, 514 after hours. Tesla 316, S&P 637, Hoodie 105, and then Palantir 159.04. What is that? Steak tartare. That is like fully rare, if I'm not wrong. And that's more of a, I think that's more of a European thing. But steak, I remember seeing the video on steak tartare, and I was like, that is, I'm not doing that, dude. I'm not doing that. So there you go. Okay, let's see what other headlines we got. Steve will be on in a bit, and we'll get his perspectives on everything going on in the broader market. So we talked about Tom Lee's perspective on this being the most hated V-shaped rally, which again, he's been saying that for a while, and I would tend to agree. We looked at Dan Niles in the morning, who said big tech should crush it, which I agree with. I mean, it doesn't look like there's any unique reason for big tech to not crush it. And if they don't, we got some issues. But if they do, that would be good. Oh, look at this right here. So Tesla, another reason why Tesla was up today, got some pretty good damn premiums on the options, dude. 32.4 million in bullish option flow is what you saw on Tesla today. So people bought the dip. People decided that they were going to take a little bit more advantage of it. And that ended up going green as well. Here is a video I saw today. This is definitely another toppy video in 2025 that makes it feel like 2021, but you know, some people might be having these conversations lately.
We're in a bull run. I can't sell right now. It's too early.
You're acting so broke right now.
I'm not broke.
You have millionaires and you have nothing to show for it.
I'm not broke. I'm just low on fiat. When
When's it gonna hit the
hits
top?
250, I will sell a little bit and buy your bag.
What's it at now?
It's at 187. I will noon pay a little bit of Solana on Rampant when it hits 250, and I will buy you your bag. We're early.
You
We're
don't know
super
that.
early right now.
You don't know that.
I've carefully selected a portfolio of meme coins, and I know they're going to go up, and I'm not going to sell my meme coin portfolio to fund my girlfriend's handbag.
He's right, though, right? He's right. Look at you. I feel called out of that. I'm sure some of you have had this conversation with a loved one, and you're saying, no, honey, we're not selling our Palantir or our Robinhood or our Rocket Lab. We are holding on, and we'll buy you your purse or your new drill on another day. Someone who is taking advantage of the stock market's liquidity, however, is Mr. Jeff Bezos. 4.1 million shares, folks, today. 4.1 million shares. 954 million is what he sold. And that brings the official sale for July 2025 to 5.65 billion. 5.65 billion. So he filed for 25 million shares, I think a month and a half ago. It looks like today he's done. He has officially sold. Amazon. Dude, Amazon still held 230 today. Amazon held 230. So he has sold 100% of the 25 million shares that he filed about a month and a half ago to sell. 231 on Amazon. It was down a little bit on the day. That just shows you how much liquidity is in Amazon. Dude, Bezos sold 4 million shares today. The volume was 28 million. So the volume was able to subsume a 4 million share sell and still hold the 230s on Amazon. He did not sell all of his shares. He sold all of the shares that he put up with the SEC that you have to file in a filing. You have to do it in advance to sell. So he sold 100% of the shares that he filed to sell. I believe he still owns 8% of the company. Let me ask, how many shares does Jeff Bezos own? It's about 8%. He would have 16%, but his wife took the other 8% on their divorce. Yeah, he still has about 895 million shares, a little bit less than 10%. Still has 895 million shares. Dude, wait, Bezos net worth? Bezos would be worth Bezos would be the richest guy in the world if it wasn't for the divorce. He'd be worth 500 billion. He'd be worth 500 billion if it wasn't for the divorce. The only reason Elon's the richest guy is because of the divorce. So there you go. 240 billion. That's a lot of money, bro. It's a lot of money. U.S. kicks off $151 billion procurement process for Trump's Golden Dome. Okay, this could have been another reason why Palantir has been getting the bid recently, and Rocket Lab. Palantir has not explicitly been mentioned in terms of the hunt for this Golden Dome. Rocket Lab has been explicitly mentioned, but I feel like if you're building a Golden Dome, you're going to need software to make that happen. Trump literally said, we buy a lot of stuff from Palantir this week. I mean, that Golden Dome could be very bullish for Anduril, Palantir, Rocket Lab, Lockheed Martin, Raytheon, all those defense companies, Boeing, obviously, SpaceX, hopefully. I mean, we'll see what happens with SpaceX. But that could be very important as well for a lot of these companies. By the way, speaking of selling, Galaxy Digital, they just sold 80,000 Bitcoin. They just sold 80,000 Bitcoin. Where's Galaxy stock? GLXY. That stock was down 4% today. They just completed their sale. They put out a press release today, like right now, that they sold 80,000 Bitcoin. I don't know why they sold 80,000 Bitcoin. Galaxy completed the sale of more than 80,000 Bitcoin valued at $9 billion, representing one of the earliest and most significant exits from the digital asset market. Okay, so they bought this a long time ago. This is Mike Novogratz's fund. And it looks like today they took some profits. No reason to take the profits, just, hey, we're taking some profits based on holding our Bitcoin. They're buying ETH instead. That's what they're doing. I think Mike was on a CNBC recently. Let me see if I can pull that up. And I think he was pretty positive around Ethereum as a concept. So it wouldn't surprise me if they are selling it for Ethereum. We'll see what he had to say yesterday.
Bucks. Where does it go from here, given everything that's already either baked into the cake or not, given this bill that's just been passed?
Listen, crypto, is on a heater, in old school parlance. So many things are going well for it. The main driver right now is this plethora of balance sheet companies, right? MicroStrategy lookalikes that are showing up, not just in Bitcoin, but in crypto across the board. ETFs were a pretty darn good way to get exposure. There are some cryptos where staking and DeFi and on-chain yield will enhance that total performance over time. And so it's the rage. And that's brought in at least $20 billion of new money just going.
Okay, hold on. I think there's something more to this. You guys think Galaxy acted as the broker, not actually selling. Okay, I think that makes way more sense because it was kind of confusing to me why the hell they were selling their Bitcoin. Yeah, okay, so Galaxy operated as the broker of selling the 80,000 Bitcoin. Sold on behalf. That's correct. I'm sorry. Yeah, I misunderstood that. Sold on behalf of someone else. And so that's also part of their business where they deal with brokering. So that is not them selling Bitcoin, which doesn't make sense because Mike he thinks Bitcoin's going to $1 million. But that's rather operating as the broker. Someone transferred and they probably did a time VWAP sale to not affect price too much. Yeah, that actually makes a lot more sense. They just put out the press release like after hours right now, 4:30. So that's why it came across my terminal. But okay, there you go. That makes more sense on what Mike is doing.
That's reignited retail fervor. The backdrop of all this, though, is a Fed who is being pressured daily almost by the administration to cut rates. And so we're in this very interesting standoff. Either Powell cuts rates and it gives a tailwind to the market, or he doesn't, and that pressure builds. And in time, he's going to be gone one way or the other. And it's been very clear that this administration wants to put in someone very dovish. I don't think Powell wants to cut rates. Right. I don't think he wants to be pressured. And listen, we have tariff pass-through just starting, and now it looks pretty clear that the baseline for tariffs is going to be 10%, but 15%. And so it's going to be a little bit more inflation pressure. We also have a lot of confidence that's come back after the big, beautiful bill got passed. Right, so you got business confidence coming back. You've got the ability on CapEx to write everything off. So you're going to see some CapEx surge now that there's clarity. And in part of these trade deals, you've got a lot of FDI being promised. And so you can have a significant increase in GDP just from CapEx next year. So I think Powell led to his own, would just stay put.
So you say stay put. You tell the president, stop. He's going to stop going after him. He's going to be at the Fed this afternoon.
This is going to be tension that's not going away. And I think that's why the inflation trades keep working. right? This president's got a dog, a bone between his teeth or whatever they.
But Mike, here's the thing. I could make an argument to you right now without having the name of the next Fed chairman that we already have a shadow Fed chair, that we know come May of 2026, there will be a different individual in that seat who is likely, very likely, highly likely to push for lower interest rates. Now, the question is, will that person unto themselves be able to do that? I think that's an open question. What do you think?
I think you're right. And I think that's why gold is breaking out to new highs. Silver is breaking out to new highs. Bitcoin is on a tear, right? The yield curve is steep. The inflation trades are working. They're going to continue to work. And guess what? We now have China joining the party with probably in my career, the biggest effort they've ever had at reflation. They've actually now made it part of monetary policy to reflate, as stated policy. And so I just think you've got the two biggest economies, one who's going to pressure rates lower, even if they shouldn't go lower, and the other one who said we need to reflate. And so you want to stay long the inflation trades. What did the Citibank chairman way back? You want to dance till the music stops. The music is still playing on these inflation trades.
And liquidity is not slowing down when it comes to the overall M2 supply, which is obviously also very bullish Bitcoin. And that's why we've also seen momentum on Bitcoin. Galaxy Digital, by the way, their stock is up like 50% in the past month. So for those that have been in it, that one has done very well. Bitcoin right here, 117. Ether is at just under 3,700. Okay, I want to show you guys this clip given Palantir at all-time highs today. This is a clip that I haven't watched in a minute, but I remember doing a video. Some of you OGs might have remembered me reacting to this part of Palantir's Q4 2021 earnings conference. It was on video. They've always tried to pioneer in the face of earnings conferences by doing it on video. And here's what Karp said when the company was still a year away from profitability. I want to show you guys just what he said and how it's manifested itself. But this was 4 years ago when they were not profitable. And here's what Karp had to say about how they would eventually get profitable.
To another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp? And that is also within eyesight. And those are goals for Palantir, because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times. Bad times mean strong finances internally. And that means at some point you have to be GAAP profitable. You can't be GAAP profitable if you're diluting people or what you correctly. Your stock-based comp is totally is not in conformity with other companies. So you're seeing a normalization. This will change. It will change in the relatively near future. It'll be linked to other things that we believe are important for Palantir, like having a company that thrives in bad times. And bad times are very good for Palantir because we build products that are robust, that are built for danger, and then the finances internally are actually built for bad times. And bad times means you have free cash flow. The free cash flow turns into GAAP profit. That means the stock-based comp has to be one that's aligned with our investors. Also, because that's basically, it's part of a little bit longer philosophical narrative. But like, if software is the only moat, then value and growth shares have to be evaluated in terms of their value. Value only exists if you can actually get a tech moat, call it. That maybe it's something besides, and growth only exists if you build a company that is where the technology is strong enough, the business fundamentals are strong enough that the free cash flow actually turns into GAAP profitability, and that's linked to stock-based comp. So this is a priority both because you care, but also, quite frankly, because it is the health of our company, which we care a lot about.
I remember being 23 years old, analyzing that at the time while I was down $50,000 on my Palantir investment. And I just remember saying, okay, hold on. Everything Karp is saying right there is not rooted in some storytelling. He's using all the business terms that people care about: free cash flow, EBITDA, GAAP profitability, etc. So he understands business. This guy is not just some crazy philosopher. He understands what it means to run a profitable business. Number two, one of the biggest critiques at the time was that the stock-based comp on Palantir was egregious. And it was. At one point, it was like it was 70% of their revenues back in 2020. So it was a lot, right? Because they were trying to incentivize employees to not go to Apple and Amazon and work on advertising, but rather work on defending the West. And his argument was that, hey, you guys think that we're just diluting investors, because the question was like, hey, are you going to just keep diluting us with stock-based comp? And he's like, no. We're not trying to dilute you with stock-based comp because that would stop us from becoming GAAP profitable. And our employees wouldn't even have any valuable stock, which would defeat the purpose of the stock-based compensation if we don't become GAAP profitable. And I remember listening to that back in February of 2022 when they did the Q4 2021 earnings call. And I was like, okay, so he understands the only way for the stock to even be valuable is for it to be, for the company to be GAAP profitable, which they ended up doing a year later in May of 2023, about 18 months later. And then number two, he understands that in order to become GAAP profitable, you need a tech moat. And that tech moat will fundamentally change, as Karp literally says, the way you value these businesses long-term. They ended up building that tech moat. They ended up scaling that tech moat. They ended up getting to GAAP profitability. And then the market followed as the numbers started to make a lot more sense, which is what we have on Palantir. Speaking of Palantir, it is time to bring on one of the OG investors of Palantir, because I am sure that he is so happy today because the stock that he was buying at $7, his Seeking Alpha articles that you can look up at $7 is now $160. Ladies and gentlemen, Mr. Stephen Fiorillo.
You know, I felt like you went into that rant because you saw me backstage on purpose because of what I said to you on the phone earlier.
Well, I went into that rant because you were late, and then I started talking, and I saw you were backstage, and I was like, well, I might as well finish this rant before Steve.
You might as well.
Dude,
it's not going to end well.
Come on, Steve. Come on, Steve. Come on. You've been saying that since 110. It's not. You've been saying that since 80. It's not going to end.
I've been saying that for a long time. It's not going to end well.
Come on, Steve. This is the day to celebrate. Forget your covered calls. This is the day. Forget the money. This is a day to celebrate.
No, look, I have shares that are uncapped.
Okay, so then you should be happy about it. Then, like,
I'm just saying that, you know.
You know what? You know that Palantir is going to $1 trillion? Like, what is the end of that sentence? What do you mean?
Can we not do that?
Dude, Piper Sandler just went on CNBC 30 minutes ago. Dude walks up on CNBC and says, well, yeah, we think it's expensive, but, you know, 170 is what we think is fair value for the company over the next 10 years.
All right, I'm going to show you something. I just updated something. And look, Palantir is an amazing company, all right? You and I believed in it before anybody else. Before anybody else was excited about it, we thought it was the next big thing for good reason. But sometimes things get a little out of whack.
Is this a Google sheet? Is this a Google? Are we pulling up comparison? Yes, we are. All right.
Just look at Palantir versus Tesla, okay?
But just zoom in a little bit. Zoom in a little bit.
Like, Tesla is freaking crazy right now, okay? Palantir is even crazier. They have less expected growth over the next 2 years than Tesla, and they're trading at such a more egregious valuation than Tesla. That's crazy. Like, at some point, these numbers are not going to hold up. I mean, trading at 162 times 2027 earnings, it just feels like Cisco of 99. It really does at this point. And I know people hate when I say that, but look, the difference between the two companies, Palantir's done $540 million in net income. Cisco did $2.1 billion in net income back then, which is probably like $5 or $6 billion for the cost of inflation. Like, this scares me because people are obviously still buying at these levels, but at some point, this is going to come down. I don't know what it's going to come down to. I'm going to be shocked if this can go to 200 without a retracement.
I mean, retracements are healthy. They're normal. They happen in the market. It would not be crazy to see this thing retrace. But I think the rally today had nothing to do with retail on a Friday waking up and saying, I'm going to buy Palantir. I think it had to do with Piper Sandler telling all their clients, hey, look at Palantir. And a lot of those clients with some deep pockets said, all right, we'll buy some Palantir.
Here's where I get even more worried. We've had quarters where Amazon has put up great numbers, where Facebook has put up great numbers, and it's gone down. At some point, the numbers aren't going to be good enough for Palantir. And the more it goes up, the harder that initial decline is going to be.
My only pushback here is that those companies are mature businesses. Palantir is just beginning its growth phase. So the numbers shouldn't be bad.
Some would say the growth phase is going to get harder.
But okay, so let's have a real conversation about this. If they have a bad quarter or bad string of quarters, the stock will get hit, obviously. But theoretically, the growth should be inflecting to really strong levels at this point. So what makes you think they're going to have a couple crappy quarters in a row to cause this thing to get
I
hit?
don't think they're going to have crappy quarters at all. I just don't think they're going to maintain a 40% growth rate. And I think that's what they need to do in order to sustain this. Like, Palantir does not have to come down. I think the key number is 40% because of how high the valuation is. If they can maintain 40% growth, I think it goes high. There's no question in my mind that it can continue to go higher because a story will be made that, look, we've already grown this much. We're doing more than $1 billion free cash flow. Look at all the clients. We're still got a 40% growth rate. Look at the net dollar retention. Certainly go higher. But if this thing comes in with 33, 34%, which is still phenomenal, I think it's going to be hard to justify it continuing to go up. That's all I'm saying. I'm not bearish Palantir by any means. I'm just saying that for it to continue on this, its price for pure perfection, you have to back it up with eye-popping numbers.
I don't disagree. We cannot have 30% growth. We need much higher levels, and I just believe we can get that. Let's get someone else's opinion who is joining us on this wonderful Friday afternoon, Mr. Matt Money.
Steve, why don't you call me anymore?
Look at this guy. What are you talking about? Show your phone log. Show your phone log.
Yo, Steve's the feds, bro.
Like that. Don't show your phone log.
Steve's the feds, bro. Dude, he can't show his phone log. There's too many side chicks. He would have.
Yeah, I'm not trying to out all these.
I mean,
non-existent women that don't. Call
I talked to you at like 3:00 today.
Yeah, well, I got Subway too. It's delicious.
Dude, I think Steve just calls you, me, and Chris and Tanner. Like every hour, he's like, all right, let me call Mitt, let me call Chris, let me call Steve. It's how he keeps in touch with all of us.
Steve, you're looking thin, man. You eating?
By the way, I'm glad you brought that up. I have a new food addiction.
Oh boy.
And it's not good. Like, it is so bad. I am addicted to dried mangoes. Oh my God. Forget it. Crazy.
Is that bad for you, dried mangoes?
Yeah, they're probably horrible for you.
I don't know if that's that bad.
Isn't it a fruit? It should be good for you, right?
Yeah, but they definitely put sweetener and stuff in there.
Okay.
It is incredible. Incredible.
All right.
I got like a 4-pound bag.
All right, Matt Money, what do you think? All time. I mean, I think you'll be on Weekly tonight later, so we'll get more of your thoughts. But 160 Palantir, what are you thinking?
I'm with Steve. I mean, I love the company. And by the way, this Matt is bearish. This is from the Rocket Lab folks that were calling me out like a week or two ago because I was selling covered calls, and they were calling me a shill because they're like, he's selling covered calls, blah blah blah. So anyway, this isn't related to Palantir. I mean, Palantir is a great fundamentally great company, but the valuation is tough, right? And I'm with Steve. You definitely need to have a 4 in front of it, but at the same time, and you and I chatted about this during the earnings call, Amit, for the first quarter, they're coming off of a pretty easy quarter-over-quarter jump, and even if they just stay flat, I think it was something like over 35% or something growth alone just by staying flat for year over year. So they really don't have to do too much, and if we know that they continue to get net dollar retentions of over 20%. I mean, they could potentially get into the mid 40s, but is the mid 40s enough? I mean, I'm with Steve here in that respect. I mean, at some point there's going to be a stumble. And as we know, when you have a stumble with something like this, it's not going to be 5%. And so, I don't know. I mean, the company's great. I think the company is eventually going to be $1 trillion company. I've moved my valuation to that within the last 18 months or so. I truly believe that. I do honestly believe that what they're doing and what I've seen, and even more use cases as I've looked at private equity companies to invest in, or not private equity companies, but private companies to invest in, have been utilizing Foundry as a fundamental operating system for their businesses. And, I've been talking intimately about ontology and many other things. I just think that this is the way forward for the next 20, 30 years as we continue to move into the AI revolution and many other things. But at the same time, there's bound to be a large pullback. Was that what we saw in April when we saw it dip back into the high 60s? Maybe one could say that. We're up over 100 some percent since then. But I'm with Steve. I think that there's always going to be a pullback, and it's a rich valuation. The pendulum always swings, right? And so right now we've been pushing on that one side of the pendulum, swinging, and I think eventually we'll be hitting the other side, 180 degrees at some point. I mean, we saw that in 2022 when we were trading at $7. Nobody and their mother would even think about buying this company. We were fortunate to be involved in that, all three of us. And we've seen it all the way through to over $160 at this point. But the pendulum will eventually come swinging the other way. And what is going to be that catalyst? I'm not 100% certain.
So before I respond to Matt, I did not want to cut you off, but Matt, your chat is amazing. Like, you may have the best chat in all of YouTube history. Like, the amount of mango comments on here, and one of them is, Steve, is your yogurt plug diversified now in trafficking mango?
Dude, I like, if there was an awards for best YouTube
Oh,
chat,
100% you have the best chat. There's no question about it.
they will take a meme or a metaphor or an inside joke and just like make sure they magnify it to
Like,
whatever degree they can.
Steve is Googling mango ice cream. Like, yeah, like I haven't had mango ice cream. Like, come on.
Yeah, mango sorbet is.
Oh my God. Mango is just amazing.
Hold on, Steve. Did you see the new gadget I got yesterday?
The new gadget? What'd you got?
I told the chat I would never do this because I need to be humble, but life's been good.
What'd you buy?
Oh, you buy a Rolex?
I bought a watch.
Did you really?
Bought a watch.
So
yeah,
hold on, Matt. He bought one of two watches. He bought an Apple Watch or a Casio watch.
No, dude. I'm
wrong.
You bought like a real watch?
I told my audience this morning. I just want to be honest with it. I legit bought a Rolex, bro.
Did you really?
Yeah.
Congratulations.
You want to see it?
What did you celebrate?
Well, first of all, I just want to show you I'm celebrating just like life and being alive. But the watch, I made sure to tell the Rolex guys to not include the time on it.
All right, now I'm confused.
Because
like, there's some joke here that's going over my head.
Because the time
is now.
Is always now.
A G-Shock. And who makes G-Shock?
It's just a random watch from 2011.
No, but who makes G-Shock?
I don't know. G-Shock. I don't know what the parent company of G-Shock is. Like,
because I could have been right with Casio.
It probably is Casio. I don't know who makes a G-Shock, but no, I didn't buy a Rolex. But I legit want to wear this and like look down at my wrist and be like, the time is always now.
And that's why you just don't change the battery.
Yeah, well, yeah, I don't even know how to change the battery, but yeah.
Okay.
What would you have actually said if I legit did buy a Rolex? Would you
I'd be very proud. I'd be very happy.
No, you shouldn't. You should say, Amit, don't ever do that shit with your money.
Why? It's an appreciating asset.
Yeah, but still.
Anyway, I want to address one more thing from the chat before we move on to like stocks and stuff. Pie over cake.
Pie over cake, huh?
Pie over cake.
Certain types of pie.
Pie over cake.
I'm a certain type, like apple pie is not that good, but like
you get a good blueberry or a good blueberry raspberry pie, with some Ready Whip on top. Oh my God! Or some blueberry freaking cream. Forget it. Freaking amazing.
All right, I'll do a poll in the chat. We'll look at the results later.
Pie over cake. Now I'm not saying cake is bad, but pie over cake.
All right, you got to pick one, not both. Pie or cake. If you got to pick, which one? All right, Steve, your final thoughts on Palantir, and then we'll move on from there.
No, I mean, listen, great company, and I think that we've earned the right to say it's too high because we were legitimate. We can show the receipts that we bought under 10.
Steve's got receipts.
What do you say, Matt?
Steve's got receipts.
Oh yeah, Steve's got receipts. Yeah.
And we have shares that are uncapped, so we've earned the right to be able to say, look, it's very rich at this valuation. And everything has to go right for this to continue. I don't think anybody is going to say Palantir is a bad company or it can't go higher in the future. But we could be too high where it's going to take a couple of years and could go sideways. That's all. I mean, I'm not bearish. I just the more it goes up, the more the fundamentals get away from it. And there has never been a stock that has been able to sustain this indefinitely.
But you also people aren't talking about Palantir like a meme stock anymore.
Because it's not a meme stock. It does $4 billion in revenue.
So
In my
that's
opinion, it never was a meme stock.
right. So my point is then if it is always going to be expensive, when you're saying the fundamentals are so detached from reality, which I agree with you, like obviously the valuation is aggressive, does it need to have that nasty ending that meme stocks tend to have?
No, it doesn't need to have that, but it needs to come to somewhat of a realistic valuation. Look, it's pushing 400 billion market cap. Okay. There's not many companies that are a 400 billion market cap. And when you start looking at the companies that are, and you look at the profitability that they produce, you can't justify it with, oh, Palantir is going to grow its EPS by 70% over the next 2 years, because guess what? That's not a lot of profit compared to what the other companies are producing.
I think that almost puts in the top 20, top 25.
Top 20.
Yeah. So there's no reason it should be that high. And at some point, you got to say, look, I don't know. It's too high, period.
Cake has 53% of the vote. We're going to leave this poll for the rest of the show.
I'm surprised it's that close.
This is like Wedding Crashers versus Old School. There's two schools out there, and I'm good with both, but there's just something about really good pie.
There's something about really good pie, but to say it's better than cake, I think is it.
Because you can have the trifecta. Really good pie with vanilla ice cream and Ready Whip. Like, how do you beat that?
You can't beat that.
You can't beat that.
You didn't. That's cheating, though.
It's not cheating. Why is it cheating?
Because you're adding pie and ice cream. That's cheating.
Because you can add it. You can't add that to cake.
Yeah, but that's not just pie versus cake.
Yeah, of course it is.
No, that's pie and ice cream.
No.
No, Matt has a point. Matt has a point.
No, because you can put icing on cake.
That's not ice cream. That's icing.
You can put icing. You can put other things on cake.
Yeah, but that's as part of the preparation.
Most cake has icing on it.
If I presented you with a piece of cake with the frosting and the icing and everything, and I present you a piece of pie with the Ready Whip and the vanilla ice cream, it's part of the presentation.
No, ice cream is a fundamentally different variable you're adding to the equation here.
Yeah, so is icing on cake.
No, every cake has icing. Most cakes, that's
cake.
Part
cake is the spongy part. Icing is different.
There's no way. That's not the argument. There's no way.
Hey, type in the definition of cake. It's the spongy part.
Okay, well, let me show you something. Given we're speaking of cake, I came across this. I came across this on TikTok this weekend or last weekend. There is a trend of people buying every cheesecake in the Cheesecake Factory. You see this? There's hundreds of these people, Steve, that are doing this. And it's becoming a thing. So
they're doing it for clicks.
Yeah, of course. But let's just like, you can keep scrolling through all these people just like eating cheesecake in their car with their bare hands.
I mean,
their bare hands. How Jesus.
How savage is that?
See, I'm all about savagery, right? Like I love eating chicken wings and but eating cheesecake with your bare hands, that's taking things to another level. I'm sorry.
But to me, that proves cake over pie because you're excluding cheesecake, and cheesecake is really good. So
I'm gonna say something that's gonna piss a lot of people off.
Cheesecake is pie?
Cheesecake isn't that good.
Teach their own. I think cheesecake is pretty good.
And I'm gonna go even further. There's a lot better cheesecakes out there than freaking Cheesecake Factory.
Oh, well, that's obvious. I mean, Cheesecake Factory is a corporate chain.
That's right.
That's fair. Okay, can we get into some more market stuff, Matt? I want to get your thoughts.
Let's talk about Alphabet.
Let's get into. So I'm going to link Steve's article right here. Matt, I want your take first. Why is Google not above $200?
I think people are still scared about the search aspect of things, but I think that they're truly blinded. I think that they don't realize the true potential that Google has with respect to AI. And I think it's as simple as that. I don't think that, and this is something I've been stating. I remember when I first got introduced to Tanner, this is one of the fundamental things because Tanner was also in this boat that he's not in this boat anymore, right? And him and I saw very, very different parts of how Google was valuable. And I think he's a shareholder of Google now, so he's changed his opinion. But initially he was hopping on the fact that he thought Google was going to zero because of the search aspect of things. And I think he's realized that AI will actually amplify the search aspect as you run more prompts, as you have the ability to run through more potential queries. All of that has the additional opportunity to have search into it as well. So I don't know. I'm just very bullish about the company.
Well, why
The
is
operating
market-
margins of the operating margins of the cloud business have yet to even hit their peak. It was my prediction. I think they actually overperformed in the quarter. When I was looking at it last quarter, I think they went from 12. You can correct me if I'm wrong, Steve. 12 the last quarter to I think over 20 or something. I was predicting they hit over 19 or something, and I think they hit over 20 this quarter for their ops margin. So it's just continuing to dominate.
Why is the market not valuing it, Matt? Like, how does the market? You're a smart guy. Steve's a smart guy. Why is the market not agreeing with you guys? Is the market stupid, or are you guys stupid?
I don't think the market's stupid. I think that the market is just chasing after things that they believe are innovating faster. And I think a lot of that money is potentially going to things like the Teslas of the world. They believe that full self-driving might be better than what Waymo's has. Maybe they view the diversification that Google has as a negative. And I'm a firm believer that if you were to break up Google, the sum of the parts will be way more than the whole. And I think a lot of people are in that boat as well. It's not a unique thought process. It's not some sort of like godly sort of thought that, I'm pulling out of my ass. I think a lot of people believe that. And I think that also could be it as well, right? They're a master of a lot of different things and a jack of all trades, master of search, but they're not really moving the dial on one particular thing that people can hang their hat on. And I think that troubles things when it comes to a market valuation perspective. Like Palantir is extremely good at X, right? Tesla is extremely good at Y. Amazon is extremely good at, say, 2 or 3 specific things, the e-commerce and the web cloud platform piece. It's very easy for people to say, evaluate those 2 things. And lastly, I think one of the things that is hard for people to justify evaluation is YouTube. They don't necessarily break out the true profitability of YouTube, whether or not that's strategic or not. And I think that there's over 1 billion or 1.5 billion, not reels, but shorts viewed on a daily basis now, which is extremely valuable. And they have yet to truly monetize shorts, in my opinion. So just like how Instagram Reels became a thing, 5, 6, 7 years ago, and they started to implement every 3rd or 4th reel that you watched an advertisement, you have yet to get to that place with YouTube Shorts, where you have an advertisement every 3 to 4 or so reels, not reels, shorts. So I think there's still a lot of running room with YouTube, but because you don't have that broken out, it's hard to put a valuation on it.
Steve, why is Google being so disrespected?
All right, so leave that up for a sec. So the biggest bear case is search is going to be cannibalized, and AI is going to come after search. Alphabet's going to have to destroy its own search with Gemini, et cetera, et cetera. Nobody's going to use it. People are going to use ChatGPT app. Well, guess what? That's just not true. We just had 54.19 billion come in revenue in 3 months. That's more than a lot of companies produce in a single year, just from the Google search segment. It grew at 11.71% year over year and 6.88% quarter over quarter. And when we stay on search, AI Overviews has over 2 billion monthly users, and AI Mode has over 100 million monthly active users.
Wild.
Like, people who are bears actually need to do the due diligence and look at what is actually happening. And then when we look at cloud, if we thought last quarter was crazy, this quarter may have been an inflection point because it jumped quarter over quarter by 11.13%. Google Cloud just put up 13.62 billion in revenue, and it jumped 31.67% year over year. And they have a backlog of $106 billion, which increased 38% year over year. They have so much forward growth ahead of them in cloud. It is crazy. Now, this is also a company that grew its revenue 13.79% year over year in Q2 to $1.43 billion. Like, when can we call a spade and say search is not getting cannibalized? It's actually being used more because that's what the data shows, and stop worrying about what's going to happen in a quarter or 2 quarters and look at the here and now and look at the fact that they keep going up.
And how's the ops margin, Steve? I didn't get a chance to dive too much into the numbers yet, but the ops margin from cloud continues to be gangbusters. And so, yeah, you have the numbers, so I'm curious.
So real quick, and then we look at the YouTube segment, okay? And let's keep in mind, YouTube ads and YouTube subscription, 2 different things. YouTube subscriptions is actually part of Google's subscriptions, platforms, and devices. YouTube ads is a separate segment, okay? And as Matt said, YouTube Shorts is now capturing 200 billion daily views globally. And
200 billion.
200 billion daily views.
Okay, so I was wrong by a magnitude of 100. So
and he's now earning as much revenue per watch hour as traditional in-stream videos in the U.S. And it's extreme.
Hold on, you forgot another stat. 199.9 billion of that is from Steve watching YouTube Shorts.
I watch a lot of YouTube, more than anything. I'm the perfect litmus test, and it's exceeding traditional video in some countries. Now, here's one of the crazy things, and this was all on the earnings call. The Nielsen data confirmed that YouTube has led U.S. streaming watch time over the past 2 years, and it reached a record of 12.8% of total TV viewing time in June. Like, think about that for a minute. That is absolutely crazy. And I'm going to ask Amit to share this. So hold on. Because I have it in the article, but it's just, it'll be better as we can play with the numbers, sharing it here. So let's look at the left side. I'll make it bigger first. All right, that looks good. So I really can say. So right now, Alphabet is trading at $193. It has a 19.42 PE for this year, and it's still trading at 16.29 times 2027 earnings.
Wow.
Okay? Part of the problem here is I think the analysts, the consensus estimates for the forward years are too low because they keep raising what they're expecting to generate in 2025, which is destroying the growth. Before it was like 27% 2 quarters ago, and now it continues to fall for the growth over the next 2 years because they're expecting more and more EPS after Q1 and now after Q2 for 2025. So they're looking at a 19% growth rate over the next 2 years, and they're kind of discounting it because it's not where the other companies are. But check this out. If we put $250 here, it is still cheaper than the rest of the Mag 7.
By a lot.
By a lot. Like, you're still getting the cheapest stock in the Mag 7 at a $250 price point for Alphabet.
25 times, yeah.
So what are we really doing?
Dude, hold on. If Google was at 250, Apple at 214 is still more expensive than Google.
You have to get Alphabet at like $300, what, 285, 290 to get to the same valuation as
wow,
291 to get to the same valuation as Apple, pretty much.
And Apple's not growing.
Well, no, Apple's growing 20%.
Well,
EPS.
Yeah, that's fair.
Yeah.
That's fair.
Right? But you can make an argument that Alphabet should be anywhere from 250 to 300 right now. Today, not in a year from now, but today, and it still would be in the bottom half of the Mag 7.
Look at Amazon coming down too. I haven't seen Amazon's forward PE hitting the 20s.
I mean, you're getting a great deal for Amazon, I believe. It's one of the cheapest valuations you've seen on a forward basis. NVIDIA is absolutely crazy here, almost 60% growth over the next 2 years. But let's look at a different type of metric that I really don't discuss a lot, and that's the cash from ops yield. And Alphabet's is not crazy. Right?
By the way, real quick, I just did the math real quick. Google's growing at 22% EPS, so they are still growing faster than Apple, even on EPS.
Over what time period?
Q2 to Q2.
Okay, yes. Yeah, that's not the time period I'm using, but yes. But think about this. Alphabet is doing the most. So let's filter it this way, because this is going to put things in perspective.
Put in the chat, by the way, if you bought any Google over the past couple of days after earnings. Especially in this 190 range that it seems.
Look at that, the cash from
When you look
operations.
from
too.
cash from ops, Alphabet is producing the most cash from operations in the entire Mag 7. Okay. Here's why this gets interesting: is they're now expected to spend $85 billion in capex this year. But what happens in a couple of years when they're able to go in maintenance mode and only spend 40 or 50 billion? Think about that. Their free cash flow is going to exceed $100 billion, and they have a 36% cash from operations yield. So at their growth rate with revenue, their cash from operations is just going to continue to go up. And paying 35 times for a free cash flow multiple that we know is not a real multiple at the moment, because they keep spending more on capex, but the amount they spend on capex continues to push more cash from operations. This is a screaming deal if you're willing to hold this for 3 to 5 years. This could easily go back to 400 or 500.
Okay, well, let me hit you with a headwind. Let's say they lose being the de facto search engine on Apple.
Yeah, we get that decision in a month.
Okay, now what if that happens? Like,
I don't think it matters.
Why?
I just don't. I just think there's too many areas that are growing too quick. You don't have a single dollar in the valuation of Waymo. Google Cloud's going to continue to grow. YouTube is going to continue to grow. And I don't think it's going to be as big of a hit for search as what everybody else is thinking. Like, there's so many components of this. This company is probably worth more if you break it up right now and sell off all the different businesses than it's worth together.
Like, I don't think you understand how much additional, like how fast Google Cloud is growing and how fast the margins are expanding. Like the margins, just the margin improvements that I guarantee that will be seen over the next 2 to 3 years. Not even growing revenue, the bottom line earnings will grow by twofold. Because I believe that the margins will grow into the 40% range. 35 to 40% range is where I anticipate that the ops margins will grow for Google Cloud.
And
so maybe 2x is a little bit exaggerated. It's at least a 75% growth from where it is today.
What they said on the earnings call is the Gemini app has grown to over 450 million monthly active users, and it's seeing an increase of over 50% quarter over quarter in daily requests.
So another argument that I think is big on Google is that, and for the broader market, Tom Lee said this today. He said, hey, look, Open Door is running, Krispy Kreme's running, whatever. That's euphoria. But then you look at Google.
Dude, Krispy Kreme running is not euphoria. Their donuts are better than Dunkin' Donuts. Let's be real.
All right.
Dunkin' Donuts is garbage.
Come on.
But
their donuts are amazing.
The fact that Google is not running just shows you the euphoria is in a segment of the market. It is not 2021 where everything was running for the hell of it.
This is the problem. This is the problem, though, right? We say Google's not running, but look at the returns over the past 20 years, right? And this is what I think the problem is with what we have in the stock market today. Everyone anticipates that they're going to find a Rocket Lab, a Palantir, and we've been fortunate to find those opportunities. But you need the Googles, you need the Amazons in your portfolio, because when you're not looking, those will still grow at 20% per annum. Yeah. Regardless of whether or not you think, and you'll be like, oh, that's not good enough. Well, regardless of what you think, they might be flat one year, they might be slightly down one year, but overall, over the long term, this thing will continue to grow pretty expansively. And so, I mean, if you just pull up the max chart, it's been absolutely phenomenal. And yeah, just about a year ago, I remember people complaining that it shouldn't even be worth $120 a share. And yet here we are at 190.
You and I discussed the valuation of YouTube as a standalone business versus where Netflix is. I mean, there's no reason why YouTube on its own couldn't be a $500 billion company.
Higher.
I'm being conservative.
Yeah, I agree.
I wanted to say $1 trillion, but I'm going to say 500 billion just to be conservative. Then think about Android. What's their phone business worth? Like, really think about that aspect. They own freaking Android.
Yeah,
half the world's phones are on it.
Most of the world's phones is on Android, not Apple.
You're right. Probably more than half. Being generous, once again. So what's that worth? So you start stripping these things out, and then what's Google Cloud worth as a standalone business? What's Waymo worth as a standalone business? What's the subscription business worth as a standalone business? And then what's search worth? Like, this is a company that has so many levers and it's so diversified. It's got so many great businesses. I am just shocked that people can't get behind this name.
It owns a part of SpaceX as well, which I think was actually the original reason why I bought into Google back in 2019, 2020 timeframe, is because they owned a part of SpaceX and I wanted to be a part of it. That's the main reason why I bought into Google. And then I fell in love as I learned more about the business and understood more and more as to how big of a behemoth this company really is, with all the great avenues and streams of income that they have. I continue to buy more stock, but that was the original investment. Was me knowing at the time they had a 7% ownership in SpaceX, and I wanted to be a part of it.
If one of you had to come up with a bear case, like a legit bear case on Google, what would it be?
I think the company culture, if that continues to be a cesspool, but I think we've seen spotlights of them within the company pushing back on that, and not only just within the company, but I think I've seen a little bit across the nation, a little bit from some of these companies starting to push back a little bit against some of these negative HR policies that have been put in place over the past 4 to 5 years.
I think the biggest risk to this, and I discussed it in the article, is that you get a DOJ that really goes after antitrust, and Alphabet gets broken up, and people see that as a headwind, even though it may be worth more some of the parts. But the initial would be that they're going through the DOJ motions, they're spending all this on lawyers, who knows how it's going to impact, and then you'll get the argument that if it's not one big conglomerate, their AI will suffer because they're able to take their AI and magnify it and expand it because they get to utilize it in so many different areas and grab all the data, feed it back in, and it gives them a massive advantage in the AI race because of the sheer amount of data they control. If they don't control search and YouTube in the same, those are two biggest search engines. If they don't have Android, that's even more data. So I think just the economies of scale that they benefit from being broken up will be a big headwind.
I think that's fair. I think that is fair. Real quick, Matt, just for you on Rocket Lab at 48, you think it's kind of just chilling at these levels and will continue to chill at these levels?
It depends on the time horizon you're looking at. I think that there's a lot of catalysts still to come for the company. I mean, if you take a longer term approach over the next 3 to 4 years, the company has yet to hit kind of an EBITDA positive moment. There's a lot of R&D spend going on in the organization right now to be able to get Neutron off the ground. Neutron still has to get off the ground. They're going to be opening up Launch Complex 3, which is where they're going to be launching the Neutron vessel in the next month or so. So that'll be interesting to see what happens there, and what catalysts come after that, what milestones they hit. They still anticipate getting that rocket off the ground before the end of the year. But not only that, I mean, from a company perspective, from a profitability perspective, they hope within the next 12 months that with Neutron spend kind of dying down, they'll be able to see their first profitability, and then hopefully not long after that, first cash flow break even, and then probably in 2027, 2028 eligibility for the S&P 500. So there's a lot of upcoming catalysts yet that I think people are not necessarily understanding. And we talk a lot about Golden Dome with Palantir, and I think a lot of people are not acknowledging the opportunity that Rocket Lab has an opportunity to play within there. This is a company that creates constellations, as kind of a way of life now. I think a lot of people are talking about how great Global Star is and how great some of these other companies that are putting satellites into space, but yet Rocket Lab is the one that helped Firefly land on the moon. People don't necessarily know that. They helped design the software and helped be on the backup if Firefly wasn't able to, their operating systems or not operating system, their control center wasn't available to work. Rocket Lab was in Colorado waiting to take over in case of a negative scenario, but they helped design the software to be able to to land that lunar lander. They also created the Global Star satellites that Apple put into space recently. So I think a lot of people don't necessarily recognize the capability and execution, and not only that, but the legacy that Rocket Lab has been able to acquire. They have great solar panels that they've been able to do, and so I think to me, the way I look at it is space is kind of some untangible
unquantifiable TAM.
Right? Yeah. You can't put a number on it. So it's like selling Microsoft, in the 90s. You don't necessarily know how large the PC market or the enterprise market is going to be. And so what all are the things that they're going to get involved in? And the thing that I think is most beautiful, which SpaceX is not necessarily as well versed in, while SpaceX has a leg up when it comes to providing communications and having Starlink and having that, across multiple nations around the world, Rocket Lab is actually helping work with the European Space Agency. They're helping work with Japan. They're helping work with other nations. So you think about it, you're now talking about a rocket company and a launch company and a satellite manufacturer that's working across borders, unlike somebody like SpaceX. And I think, unfortunately, to the detriment of SpaceX, Elon's politics is very polarizing. I'm not going to comment which way that I lean on that, but I think, unfortunately, that's a polarizing thing for people. So enable to continue to grow on a global perspective and a global stage might be put at a headwind comparatively to Rocket Lab. They've continued to make deals across multiple nations and across multiple administrations. And I think it's just beginning to take off. And so, to me, they're the number 2 player in a growing market. Why would you get rid of them today? I honestly think that there's an opportunity for this thing to be worth at least 150 billion for what I know. And that's what I know. And I don't know a lot. So it's likely that it's going to be much larger than that. So I think anybody selling today, I don't necessarily, what's the word I'm saying? I can't tell anybody not to sell. I don't know your personal situation. I'm afforded the opportunity just based off of how I've set up my situation and how I've been able to invest, to take on the risk, to be able to say, hey, let me see where this can take me. So even if it goes to 0, I'll still be okay. But I'm willing to put my conviction into Peter Beck's hands. And I think he's, if anybody's hands, to put your conviction into, it'd probably be Peter or probably be Elon. So why not? Why trim today if you think that they're the leaders in the industry?
Steve,
sorry, monologue, but
no, you're good. That's what people wanted to know, your take on Rocket Lab. Steve, I want to get your take on this back to Google. Peter says Google search and other advertising is their largest source of revenue, generating 50 billion. This will erode over time. And I think that is the overhang on the stock, that this will erode. Even though this quarter was good, what is your take on why this won't erode over the coming years? You're muted, by the way.
All right. So the idea that it will erode started with ChatGPT.
Yes.
When did ChatGPT come out? Q2 2023?
November 22, but yeah, Q2 23 is when.
When was it? No, but all right. It started becoming known, but when did it become a thing? Q2 2023, right?
Correct. Yeah.
Since then, okay, you've had, including Q2, okay, 9 quarters. So just over 2 years. You've had 9 quarters, and search revenue has gone from 42.63 billion to 54.19 billion. I mean, that doesn't seem like it's eroding.
Well, the rate of growth is eroding.
The rate of growth with everything as it gets bigger erodes.
Yeah, that's fair.
It keeps generating more revenue. That's all that matters. It's much harder for a company that's doing 10 billion in a segment to grow at a 10% rate than when they were doing 5 billion.
So you don't think it would erode to such a degree that it would be decimating for the business, essentially, even if
how about this? If it doesn't grow anymore and it just flatlines, but every other business component grows, does it really matter? No, not at all, because the profitability from search is going to fund everything else. but I don't see it eroding. I mean, this argument has been the bear case for quite some time. And quarter after quarter, Alphabet continues to laugh and say, all right, we just grew by double digits year over year. I mean, how many more quarters of double-digit growth do we need before this gets abolished?
I gotta run. Sorry, I gotta run. I'll talk to
All
you
right,
guys.
Matt.
Thank
I'll
you
link
for
Matt's
having me.
Twitter in the chat. Matt, see you.
I mean, show me the data. Like, in order for you to say that it's going to erode, that is a belief. There's no fact at the moment because it hasn't happened yet. Like right now, I'm dealing with facts, and the facts are search keeps growing.
Okay, I'm putting a poll in the chat, given how bullish we've been on Google for the past hour. You got to pick one, folks. Which one? Next 5 years, Google or Amazon? Because you've been spouting a lot of bullishness on Google the past hour, but which one are you taking next 5 years? By the way, Cake won 57-43 on the other poll. I know which one you're going to pick.
Take in the next 5 years.
Got to hold it
for straight appreciation.
Amazon at 230 today, Google at 192 today. Which one? You can't own both.
Which one are you going to get a better ROI on?
Which one do you want to own for the next 5 years? If you had to pick one.
But the premise is, what are you going to make more money on? ROI?
The premise is whatever the hell the premise you want it to be. You can pick one in your portfolio. Which one do you want?
I think Amazon's going to do better from an ROI standpoint.
So you're picking Amazon.
If I had to pick one to make money, I would feel more comfortable with Amazon because I think there's less headwinds. They're going to be the first $1 trillion revenue company, and their free cash flow is going to go crazy in a couple of years.
See, now for everyone saying both in the chat, don't do a cop-out. This is what makes this like interesting because you got a lot of Google bulls that when they get this question, they're like, well,
now, in all fairness, I do own both companies.
No, of course. It's a thought experiment, right?
Right. And I think that Amazon Robotics is something people aren't talking about, and they're going to be one of the top 3 players in robotics.
I'd pick Amazon too, dude. I like it. Just at the end of the day, there are less broader headwinds to their core business than there is for Google. Even if you believe Google will navigate it, you just want a little bit of safety, right? And now if Google was at 130 right now, I think I would. But
it's a little bit of a different story.
Exactly. But it ran up 30% the past month now. So
yeah.
5149 Google on the chat.
But I mean, I will respond to everybody who leaves a comment on my article about Google.
Yeah, let me link it right here in the chat so you guys can.
It's such a good company.
It's a great company. Dude, we're using YouTube. YouTube is phenomenal. Like,
I spend more time on YouTube than any other streaming thing or TV.
I agree. So do I.
And it's because there's new content every hour of every day.
And the algo knows what you want.
And you can find whatever you're interested in.
Yes.
You just type it in.
Yes. Yes.
If I want to watch stuff about freaking food, I can type it in.
Dude, pie over cake. That's
dude.
I don't know, bro. Pie over cake.
So I drive far out on the island for pie. To a little place called Briarmere Farms.
Wait, spell it again. I want to put it in. What is it?
Briarmere Farms. Bring up the website. It is heroic. It is incredible. And if you can order from there, I highly suggest you do.
Wait, is this it?
It's in Riverhead, New York.
This is it?
Yes, it is. Oh my God. This place is you can shop online. Wow. If they actually deliver pies, I highly suggest this. Let me tell you something. I will drive an hour and a half to go get
an hour and a half. No, I'm not doing that. Not for pie, bro. You're out of your mind.
You can order online. No, I mean it's incredible. I found this place because we used to play golf out there, and
bro, $48 for a blueberry cream pie.
Dude, it'll change your life.
That's a bit aggressive.
It'll change your life. Yeah, I mean, is it though? I mean, think about how much cakes are from a bakery.
Yeah, but cakes are different than pies.
Are they though?
Yes.
Not really. I mean, I can tell you the cake that I bought for my nephew's birthday was more expensive than $38.
But it's a birthday cake. It's a post.
Even an ice cream cake from Carvel is more than $36.
That's true. That's fair.
I'm just saying, like, if you think, wow, that's expensive, then you start thinking about where everything else costs. It's not. It's in line with everything else. It's incredible.
S&P 7,000. You still think it happens?
Yeah, I think that S&P 7,000 is going to happen. I'm getting that feeling. I mean, we're at 60. We're almost at 6,400.
I know. It's kind of cool. It's kind of cool.
Like, think about that.
Yeah, dude. It's like, it's.
And we could do it.
Okay, well, here's the better question. Do you think we get an August slump like we historically get?
I don't think we're going to.
Why?
Oh, look at this. Intel confirms plans to spin off its network and communications.
Oh, do you still own this pile of what? Do you own it?
No, but I'm thinking about getting back in.
Jose, who I trust on semiconductors, he said if you're willing to hold it for 3 to 5 years, right now is not great.
I agree, and I think it can go to 17 before it goes higher. I think Intel is going to be the sleeper play that everybody's like, we're so dumb for not buying at these levels. This is becoming AMD back in like 2016, 2017.
I don't know if it's that.
And now I'm not saying that you're going to make 100x on your money or anything, but what I'm saying is people are going to look back and be like, I can't believe we didn't freaking trust Intel. Like, at this point, do you think Intel's going out of business or not?
I'd rather buy more NVIDIA.
I don't disagree.
Right? But wouldn't you feel safer just buying more NVIDIA?
100%.
So unless there's something asymmetric on NVIDIA.
I'm just saying, from a contrarian standpoint, Intel's looking pretty interesting here.
Yeah, that's fair.
It would be very interesting here.
Are there any other plays that are getting your attention at all in the market?
I mean, I'm very bullish on Salesforce.
You're still in Salesforce.
Yeah.
UNH, Chris loves that one. You like that?
It's becoming more and more interesting, but I'm worried about look, there's too many unknowns that I can't quantify. The metrics are amazing. Everything makes sense from the investment standpoint. I'm just at the point where I don't know if they're going to be able to generate the free cash flow on a forward basis. They have been with all the overhangs and all the changes to legislation. So I don't know.
Okay. I think that is fair. Someone has a super chat. What does Steve think about Grab?
I don't have an opinion on Grab. I haven't done the due diligence. It is in a segment of the world that I don't think is going to get the attention that other things would get. And there's other things I'd rather buy at the moment. So it's just something I'm not looking into.
I disagree. I disagree so much with your thesis.
Somebody in your chat lives 20 minutes from Briarmere. Have you gone to Briarmere, and is it amazing?
When's the last time you went to this place?
So one of my coworkers lives out there, and he brings in pies for us a couple of times a year. So I don't even have to drive out there anymore. Like, he lives like 10 minutes
away. You literally have a pie plug again.
I mean, I guess I technically do.
You have a plug on everything, dude. Literally everything. What are you drinking? Are you drinking milk?
No. Drinking combination of water and cranberry juice to stay hydrated. Because I'm so sick of just drinking water that I have to put something in it.
It sounds like flavored water almost.
Yeah, if I'm using cranberry juice. Sometimes I put lemon in there also. It tastes pretty good.
I actually do like lemon water at restaurants. I like that a lot.
I mean,
okay, I think that's. I want to get your update on this as well. Have you started seriously buying Ether?
Yeah, man. I bought more Ether the other night because I was bored.
On Robinhood.
On Robinhood, man.
All right, so we're both ETH boys now.
Yeah, man. Becoming a crypto bro.
Becoming a crypto bro. By the way, I did 2 deep dives this week. One was on Ethereum on my channel, and then one was on MicroStrategy.
It came up in my YouTube algorithm. I didn't watch it yet.
You should watch the MSTR one because I think that was that was
what would be consensus? Bullish on both?
Yeah, but both of the people said XRP is a pile of dog shit.
Oh, dude. SmackDown just said I'm 45 minutes from Briarmere and they go monthly. Look at that.
There you go.
Can you imagine that I started talking about some place it's called Briarmere Farms and people know about it? Dude. Some obscure place off the beaten path that makes the best pies you'll ever have.
That does prove this is a pretty good spot.
It is so legit.
Are we still doing the thing we're doing on in August?
I don't even know. Oh, you mean the show?
Yeah, are we still going?
Yeah. I mean, you
All
don't
right.
have to go, but yes,
I think I told everybody already. I'm going to my first official sports card convention in August.
The only thing is, there's one catch.
What's the catch?
What type of ticket you buy.
There's
Now,
levels to these tickets.
now they have a VIP ticket where you can cut the line.
The line to what? Get into the show?
Oh, dude, it took us 30 minutes in the winter, there was a 30-minute line to get in.
How much is the ticket? VIP?
VIP is $99 for the weekend, and a regular ticket's like $15 or $20 to go for the day, something like that. I am not waiting outside in the freaking heat. Okay? I'm just telling you that right now.
No, I'm paying $15. I'm waiting in the heat, baby.
Like, if you want to wait in the heat, that's fine. I'm not waiting in the freaking heat. If it's going to be 90 degrees, the last thing I want to do is be standing outside for 30 minutes waiting to get in.
You can get a good sweat, no. All right, fine. So we'll do VIP for this.
We'll figure it out.
So the question is, am I buying the same LeBron James rookie that you're buying?
If we can find it, I'm buying it. I mean, I got, I don't know, 5 or 6 people going right now, maybe more. So we're going to have a few people with us. So don't worry about bringing anything with you.
Yeah, I don't even care about buying it, but I do want to see what the experience is.
But it's going to be a crazy experience for you.
By the way, Tesla, which I also want to get your take on, but they just said, hey, in November, people will be able to vote for an investment in XAI.
Good. How about just do it? Have the vote now. Have a special vote tomorrow.
What do you think of their earnings?
There is nothing bullish about their earnings.
Dude, there was some stuff that was bullish. There was not.
Okay, what? That they're going to get half the cities by the end of the year? Stop it.
Dude, I can't believe he actually said that, bro. Like
that's a freaking figment of his imagination. Right?
It wasn't even kind of realistic. It was just like, what? Like, by the end of
now, if Tesla is able to take some of the cash off the balance sheet and invest in XAI, to me, that's interesting.
Well, hold on. That's interesting, but I don't know why people are going crazy about it, because it's not like they're going to get some massive ROI and they're going to invest in a $200 billion market cap.
Company they buy, and it depends where the valuation is now, but there's a world where XAI becomes $1 trillion company in the future.
Oh, I agree. I'm just saying we're not getting in at 10 billion. We're getting in at 200 billion. Like, and $1 trillion is not going to happen overnight for XAI.
And you got to think about this. Subsidies for cars are going away in September, and subsidies for energy at the end of the year. This is going to be a really hard comp next year for Tesla. Their forward earnings have gone down. All the estimates are predicting less money. It doesn't look like Optimus is going to come out when they need it to. I don't know. I can't get excited for Tesla when I think NVIDIA is going to keep doing really well.
Well, I'm buying it because regardless of the numbers, I feel that this stock should be probably below 200, and it's not, which means there is so much anticipation.
Demand.
There's so much demand for good news. Tesla does anything good the next 2 years, I think it is able.
It could. Look, it definitely could. There's no question about that.
I mean, realistic, bro. After all the things that have happened, horrible earnings, Elon spatting with Trump, and it's holding 315. Like, it just means the street thinks this is going to be a big.
Never traded realistically. Problem is, when you look at Tesla versus the other Mag 7 companies, you only have a finite amount of money. Would you rather own Tesla than NVIDIA or Tesla than Amazon over the next 5 years? Like, I don't know that I would at this point. There was a point where I would have said yes.
Yeah, I mean, Tesla over NVIDIA, Amazon next 5 years is a bit hard.
It's hard. And if you had asked me that a year ago, I would have probably said I think Tesla is going to be bigger than both of them.
Now, what if I say 10 years instead of 5 years?
It changes a little
bit. It changes, right? That's what.
Once again, I don't know what's going to happen with Musk over the next 10 years. He's too much of a wild card at this point.
I don't disagree, but I also wouldn't bet against Elon.
No, you can never, and that's why you can't short it. Like you can't bet against Elon.
No.
But look, when I do the numbers, it's just there's other things I'd rather buy. I'd rather be in Meta. Because I think Meta is going to do things that people can't even think about at this point.
You saw the latest announcement on Zucks just now?
I saw that they're making the social network part 2.
They are?
I heard something about it that they're making a sequel.
Okay, well, I do have an update on TV that we'll talk about in a second. But no, they hired one of the chief guys at OpenAI, and they made him the chief scientist at Meta Superintelligence.
Yeah, he only plays offense.
Dude, he is
only plays
spending whatever he needs to spend.
He doesn't even walk back to play defense when he plays basketball. He only stands up under the basket and just freaking cherry picks and shoots a layup. He doesn't believe in defense.
Okay, you're not going to care about this too much because you never watched Breaking Bad.
I don't even know who that is.
So I don't know either. But this is the newest show from the creator of Breaking Bad, Vince Gilligan, called Pluribus, on Apple TV.
Okay.
And the only reason I will watch this is because it is from the creator of Breaking Bad.
Okay.
You don't appreciate Breaking Bad, so you don't care. But for those that care about Breaking Bad, that's a big deal.
I will be watching the Yellowstone spinoffs with Rip and Beth. I will tell you that, because Yellowstone is the greatest TV show to come out in the past 5 years.
Oh, she was in Better Call Saul? I don't know. I haven't seen Better Call Saul. I've never gone deep into that. I don't know what the show's about, but the trailer is like someone licking donuts.
Did you watch Yellowstone?
No.
Dude. It made me start looking at real estate in Montana, and I was like, why is this real estate so freaking expensive?
Well, Montana has a bunch of mountains.
I couldn't believe it.
Yellowstone.
Oh my God. It is such an incredible show.
Is this on Max? No, it's on Peacock.
No, it's on Paramount.
Okay.
It is incredible.
Someone said I did the same thing.
Dude, that is one of the that is awesome. Steve, where is it? Where did it just go? Steve defends pilot, Yellowstone defends land. That is amazing. Absolutely amazing. Oh, dude, Randy, thank you. Watch Sons of Anarchy. I have tried to get Amit to watch Sons of Anarchy for so long, he won't do it. Won't do it?
I believe in the government, bro. Anarchy is completely,
Sons of Anarchy is incredible.
Yeah, I haven't watched it. I've not watched it. I've still not watched Entourage. I said I would do that. I didn't do that either.
Dude, watch Sons of Anarchy. You won't be upset. Watch freaking Yellowstone. You won't be upset.
Bro, see, this is why it's bullish Google. There's too much stuff on YouTube that takes my attention.
There's so much stuff on YouTube.
Like, I don't know how you find time to watch the shows and YouTube. Like, I'm just plugged on YouTube.
Because I barely sleep.
Dude, get a Fitbit, bro. I just got a Fitbit. I got my sleep score last night. It wasn't that good.
Oh, God. You and Tanner can nerd out on sleep scores.
What is let me check. It's 79, I think is my sleep score.
Tanner's sleep score is like 96 or something.
No, Tanner's a really good sleep score.
He's out of control.
I need to get mine into the 90s, so.
Did you watch Ray Donovan?
What?
Dude, what?
What's Ray Donovan?
Oh, my God.
American drama series. I don't know who Liev Schreiber is.
Oh, yeah. Well, that's a good quote. R.I.P. to the Hulkster. Crazy.
Oh, yeah. Yeah.
Crazy. Icon.
Dude, Hulk and did you listen to Ozzy at all? Ozzy Osbourne?
I mean, I'm not shocked that Ozzy passed away. I am a little shocked that Hogan passed away, but
yeah, that was another reminder about life. I did watch Hey Arnold when I was little. I watched
Did you ever listen to Black Sabbath?
No, but I listened to one song from Ozzy Osbourne. It's called I Don't Want to Stop.
Okay.
And I still remember that song. I haven't listened to it in a while, but it was one of my favorite songs when I was younger. That's how I learned about Ozzy, that one song.
Okay. Yeah, we need to get you to start watching some good TV shows on that.
Dude, there's just so many good stuff on YouTube, so many podcasts.
I get it, but at the same time, TV's never going to be as good as it once was.
So I got a 55-inch for the apartment, and so
Wait, what?
55-inch TV.
Excuse me?
What? Okay, no, I'm not going to 85 inches, bro. Like 55 inches
Why?
is because 55 inches is a big ass TV. Like, no, we don't need 85 freaking inches.
Yes,
Like,
we do. You got the 55 for your bedroom. That's fine. Now you get 85 for the living room.
no, I was going to do 55 for the living room and 55 for the bedroom, but
no, you get 55 for the bedroom and a 55 for the studio. You get an 85 for the living room.
Dude, that's a lot. I mean, I'm not opposed to it. That's a big TV.
I mean, think about how much you'll enjoy watching YouTube on that.
That's true. That's true. It will be nice to see.
I mean, the reason I'm saying 85 is because I have a 75 in my living room based on where the wall is, where I have it up. But after seeing the video from yours, I think you need an 85.
Yeah, this would look nice. I mean, to have something like that there. That's a pretty big TV, bro. 80, that's a lot. That's a big TV. All right.
You won't be upset, I can tell you that.
I think that's it. Michelle says we have a 65. Yeah, a lot of you guys in the chat have above that much. Well, dude, yes, when I go to the apartment, I will start watching more movies.
Yeah, it all depends how big the room is and where you're sitting in relationship to the TV. Like, you can't have an 85 and be sitting very close to it.
Yeah.
But the good thing about a 75 or an 85, depending on how big the room is, depending on how far you go back, it still looks great. So if you're walking around doing stuff, it's still great.
I'm ordering the furniture on Monday. We just went to check it out yesterday, and yeah, it should be coming in soon. So
I'm gonna privately text you where you should look.
Okay.
Before you place the order.
Yeah. Let me know.
It's the best furniture I've ever bought.
I imagine it's not Raymore and Flanagan.
No, I've gotten some good stuff from there, but no, it's not. I'll just say we got some Lovesac stuff, and I gotta tell you, it's incredible.
Okay.
Have you ever heard of this company?
Lovesac is the name of the company?
Yeah.
No, I've never heard of it.
Dude, I gotta tell you, geniuses with engineering. You can just take the couches apart, make chairs out of it. You can rearrange it based on whatever you're doing. It is incredible. And it's so comfortable. I cannot believe how comfortable it is too.
But do they have showrooms or are they all online?
Yes, they're at like every big mall now.
Okay, I'll take a look.
Yeah, you will not. I didn't go that crazy with putting speakers in it.
Look at this website, bro. These guys get marketing. Look at these.
See if they have something about how you put it together. It's really incredible how this goes together. Oh, you were just showing it with the things you put in. You can take the couch apart in like 2 minutes and rearrange it in all individual seats and everything like that. It's wild.
Dude, okay, so are they actually publicly traded? Because the name sounded familiar when you
I have
said
no
it.
idea if they're publicly traded or not.
Yeah, they are. They have love as the ticker?
Do they?
Bro. They went public in 2018. It's not been a good IPO, but year to date, they're down 15. Do we got to do some DD?
I mean, this company is so legit.
Bro, it's not easy to get love as the ticker.
Well,
even Southwest has LUV. Huh.
I mean, they're selling $700 million worth of freaking couches, so they got to be doing something right.
Market cap's 300. They're probably not profitable, I would imagine.
Yeah, I mean,
I think they are.
They are.
They are profitable. Yeah, they have a PE. They have a price to earnings.
They're profitable.
They are profitable.
Go see where they are at one of the malls. It is so incredibly comfortable. It's wild.
Okay, I will take a look. All right, folks, that is it for us. I think.
You want to join us tonight?
I might.
Maybe stop in for like 10 minutes. Talk about some, Pokemon markets.
So can you send me the link so I can put it in the chat so people can?
I don't have the link right now, but it'll be on Alex's channel.
Nostalgianomics, right? Nostalgia. The thing is, Steve, my grandparents leave tomorrow back to India, so I might be a bit busy tonight. But yeah, so Steve's going to be on a podcast tonight. Here's the link in the chat. They're going to be discussing Pokemon and cards. So if anyone wants to check that out, you can go to that channel. All right, good stuff. Thank you, everybody, for joining. Steve Seeking Alpha on his Twitter. I'm going to put that right there in the chat.
We need to do a food show. Like, we got to figure out a way to do like a food and a culture show also with TV and stuff.
Dude, when we set up a studio, I think Steve and I are still thinking seriously of like making a legit podcast, like with videos and cameras and microphones and like a real production. So maybe we can incorporate some of that stuff into that as well.
I saw something today that looked so amazing. I'm the only person who would probably think this looks amazing. A cannoli pizza with rainbow cookies on top. Oh my God.
Where did you see this? On Instagram?
Somebody sent it to me on Instagram. Yeah. Yeah.
Oh, I think I know what you're talking about. Oh, this is it. This is it. Hold on, I found it.
I'll send it to you. Hold on.
No, I got it right here. You don't need to send it to me. Well, maybe if this is the same one. This is what. Hold on. Is this it?
Yes.
Yep, the Bodhies did that. I don't even remember the ice cream truck.
I can't do the music. The music is too much. But
oh my God.
Dude.
I would get down on that. I must find out where this place is.
It's in New Jersey, bro.
Is it really?
That's what it said. It's in Middletown, New Jersey.
That looks so great.
It does not look great, bro.
Looks
That doesn't.
so
All right. Well, that's it for us. Again, thank you everybody for being here. I believe we will have Palantir Weekly tonight, 11 p.m. Eastern. So I will be back later today. If I don't see you today, then Sunday we should have futures. Last week we couldn't, but we'll be here this Sunday. And yeah, we'll keep going from there. All right, that is it. Thank you everybody for joining every single day, morning and afternoon. Hopefully everyone has a great weekend. And we are done with week 3 of Q3 S&P all-time highs. Last week of July next week, and we'll keep going from there.
You mean Q2, not Q3.
Sorry. No, we're in Q3 now. We're in July.
Yeah, okay.
Yeah.
I thought you said we're wrapping up Q3.
Oh, we're wrapping up the 3rd week of Q3.
3rd week of Q3, gotcha.
Yeah. Got 2 more. Next week, bro, I don't know if next week earnings.
Apple, Amazon, Meta, Microsoft.
It is going to be
Super Bowl. It's a Super Bowl.
Next week's Super Bowl.
Super Bowl.
That's correct. Robin Hood. Got Robin Hood.
Yeah, I mean,
got
hey,
grabby grab.
Look, I'm a customer.
You are a customer.
Not sure.
SoFi next week too.
Whatever.
Dude, why do you like purposely piss people off on that? Like you don't like. You have a ton of SoFi. You're up a lot of money on, so you should feel so happy about that. You just don't.
Look, I'm interested in seeing what happens with AWS of FinTech.
If this is the quarter where they break out to like the 28s, 29, that would be pretty cool.
Yeah.
UNH next week. Yeah, there's a lot of stuff.
Yeah, dude, we need Powell to do something for us. Is what we need.
Oh, last question. What was your take? Did you see Trump and Powell interact together?
No, everybody, at least 15 people have texted me and asked me. I have no idea. I didn't look at it. I haven't had time.
It was pretty surreal.
Did not have time. All I know is that I went to a magic show, and not the train, like a legit magic show on Broadway.
When?
I took the day off yesterday.
You took a day off from work?
Well, I took the day off, but I still worked. I worked until noon because I had several meetings, and then I worked till like midnight when I got home, catching up on emails. But I will tell you that this freaking guy was incredible. Incredible.
Yeah, magic shows are legit. I've been to a couple. They're definitely fun to be there.
Could not believe it. All I will say is this is exactly why I will not play in a private card game unless either I am running it, because what this guy did, like he did a lot of crazy stuff, but he did this card thing that was like,
I know card tricks, right?
Mind blowing.
Dude, I had a magic phase when I was little. I became a legit magician. I know card tricks. Like I know like 10 different card tricks. So
like the fact that he put a camera above his hands and walked you through what he was doing and still did it, and you didn't know how he did it. And then he did some other stuff that was with the cards that was absolutely mind blowing.
Well, just remember, Steve, the time is always now. The time is always now.
Time is always now. It is.
All right, folks, that's it. I'll see you guys tonight on Palantir Weekly and then Sunday on Futures. Bye, everybody. Have a good one.